It is. It is very clean, average move. And look at this. Wait, hold on. It just keeps going. It's like a big cone. I don't know if you're seeing what I'm seeing, but I'll just pick this. The line's not exact, but we could see another move like this probably pretty soon, either lower or higher in the future here. But yeah, if you could capture a breakout above this gray area, definitely big moves, as you can see. Oh, hey, user.
Hey, how's it going? I'm going to be mic'd out. We're actually recording this. We've had a couple requests to record. So
Okay.
honestly,
Yeah, no
it'll help a lot of people if it's a Monday night thing, I think.
Yeah, for sure. I mean, a lot of people are out, gone on vacation or whatever. It's fine.
Yeah, but they're still paying attention. So,
Good.
All right, I'm going to mic out, and it's a late start, but we'll catch it next time. Okay.
Yeah.
You're live. Okay, bye.
All right. Okay, so this is very telling of what could possibly happen next. Look at all these stacked open states there, ain't that something? When I pull up this screen, I immediately see this whole area. It's like a battle between trying for upside and downside. Strong compression, obviously, since here. Kind of a consolidation. So we have our compression, consolidation, right? So now that's going sideways. It's gaining some fuel to get back above this purple vector and enter that elevator to go higher and make it H1. You obviously see with the green and the standard deviation level in the golden zone, we can see we're going to see a squeeze soon. 30% bands on in between the 80 and 50. See with the green and the standard deviation level in the golden zone. This looks pretty good. We can see we're going to see a squeeze soon. This is something I could possibly enter as long as we find more clues that this will make a H1. So obviously longs. So this thing can go sideways again. Let's make this our entry. So that'll be like our entry. Stop loss, that's something I figured out next, right? Let's see, stocks at 272 something. 50%, $2 is kind of big. To me, I'm willing to lose a good amount, like I said. So I'm just for me personally, I'll put my stop loss somewhere around the 50% band if it goes there, if it breaks on our vector. And then our take profit somewhere up in there. Oh, that's crazy. Well, let's not do that. All right. Draw this out. Okay. So 80% band would be amazing. 286 would be a pretty big move. Is that like 5%? There's a high here, or open state there, 291. So somewhere in this area would be a good exit to me. Yeah, the dot under standard dev it indicates squeeze. I think. Yes, squeeze. So squeeze happened here. I guess a squeeze to the downside. You see the red there. There's a squeeze here. It's a squeeze without it being an assignment necessarily, I guess. Another one here. That's what that means. Let's look at the options analyzer. We're at L8. Not much odds of anything over here. I mean, there is 3 of the L12. Each one I would expect more. Only 2 occurrences there. Strong occurrences for beyond that, for 2, 7, and 10. I'm gonna add some more days. This is only 500. Let's double it. 1,000. Options analyzer. Yeah. So what would you rather bet on? This L9, 34% odds, 2 occurrences, right? We're at L8, or this H1 here, which happens 100% of the time, sometime. 7 occurrences. So we'll definitely get our H1 soon here. Now, let's take some stuff off this chart. Let's look at the linear. Yeah, it's just compressing a little bit. We see compression here, and that big squeeze higher, like there. Same here. Compression, expansion, compression, consolidation there. A little expansion, compression, expansion. It's a cycle. Yeah. Let's see. What's we got? Let's go to wave 10, which should be pretty similar. Okay. So similar to wave 7. Yeah, there's a lot of open states there. When you see stacked open states is what we call it, stacked opens right there. Doesn't always indicate that's going to shoot up like this blue line shows. Doesn't always mean price is going to conquer and close all those, but it certainly can. Definitely can predict that sometimes, but not all the time. That's not something you should use as confluence alone. Got pretty close to perform the average move. The blue line meets up with the gray. This is our low here. Is that L4? So a little bit consolidation after compression. Now it's above purple vector. And usually when price gets pretty close to the line here, like between this candle and the line, it's the time for it to go up is much sooner. Let's put percent band on. In between the 80 and the 50. So yeah, very similar to wave 7. Same story. Going for H1. Look at this, L4. Okay, there's L5 here, 46 odds, 1 occurrence. Or we got H1 here. And then after the H1, look at the H2. Yeah, so this looks pretty compelling for upside too. Okay, it's just longer term. Wave 20. I just like to look at all these. For swing trades, we can be in and out of this in a couple of days. And the wave 20 is irrelevant, but I always like to look at it to find the flow of the stock. Where is it flowing to ultimately? Friday's splice shows L3, 4% chance with L4. Yeah, send a picture of that if you can. You guys can send pictures to chat of stuff too. Like I said, we all contribute to make a team effort. Let's look at. There's a double bottom there. That's possible, right? 51% chance. There's an M there. So this is where sometimes narrative can change. Everything in wave 7, wave 10, wave 3 looked good short term. Then something like this, shows well, it's M assignment, meaning compression. It just kind of started, right? On the 22nd. Still in golden zone, printed red, double bottom there. Look at the options analyzer. L2, but there's still more odds of H1, right? Okay, what did you see? Apple wavelet. Yeah. I'm looking at guys splice of Apple. Shows L3 4% chance. Okay. Interesting. Yeah, so not much odds of L4 at all. As Guy just posted in the chat. So that's good. Okay, so yeah, Apple looks pretty good. This is something I would take a trade on. Like day over day. If we get enter tomorrow without the calls being up too much. I can start looking at the options chain. I'll just go to Yahoo Finance. Pull up options chain on that for Apple. I'll change my screen 1 second. Apple. Yeah, we can look at Meta soon. All right, let me change my screen. Okay. Yeah, dual splice, like Milk said, very powerful for swings. That's something we can certainly view too. All right, so we go to the monthly, weekly. January 16th, we just go to this date here. I think it said 271. Or no, what was the open state? It was. I'm going back to Fractal real quick. 1 second. 291. It's open state wave 7. Oh, 1 second. 1 second.
While Anton's getting that situated over there, I did want to go over Uber. Uber got a Wave 7 crossover yesterday. Ended up playing that this morning. But I'm looking for some continuation here on this one. Like we said, just starting a new Wave 7 bullish cycle. I did just turn on my stream, or those with the software, pull up Uber. You can see Wave 7's generating us a K signal down there in that golden zone, that 0.1 standard deviation. Got that crossover. So ultimately, I'm looking for us to continue to hold above 80.41. If we can do that, I ultimately wanted to see this press into that 50% upside and around that average band, currently around that 85.33-ish. Keeping these weak expiration 85 calls, and next week expiration 85 calls on the radar. Like I said, played those today around 9 cents to a high of around 18 cents. So already were able to capture over 100% all that. So I'm going to see if we can get some continuation on that one. I also have Intel. I don't know if I don't think you guys went over this one just yet. Similar setup, just got a crossover from a previous 10% probability test here, wave 7. Tested at 0.1 standard deviation golden zone, generated us a K signal, new cycle above pivot and vector. So ultimately, I'm looking for this to push into 37, 37, 40s, 80%. And then we have that our average band here around that 41 area. Screen's popping. I don't know how I can fix that, to be honest. Big and small. It does that sometimes whenever I am streaming. So we got those two. Another one we got is SMCI. Here, let me click out of that so it stays full screen. So this one's we're still trying to establish support above vector. So vector here, purple lines at 30.24. SMCI currently is right at 30. So this one I'm watching to see if we can get a nice close above on the daily, above that 30.24. Give us that crossover above wave 7 vector. If so, you see we're already here in the standard deviation, this golden, the 0.10 standard deviation range. I'm going to look for this one to generate us a K signal as well, to play upside into 32.29. We also have an 80% chance of testing to 32.99, and then our average band here around 34. So as many of you guys already know, with these wave 7s, I'm typically looking a week to 2 weeks out on those contracts, looking to play it. So keeping that 32, 34 area on watch for me. Looking to play it. So keeping that 32. Another one I have is Dell on watch for me. Dell wave 7. So all these setups are relatively very similar. I mean, all this is systematic. So another one I have is Dell, similar in a way. So you can see we got vector here 126.09. So all these setups are Dell. You can see we're also into that 0.1 range here on standard deviation. Another one I have is so above that 126. So you can see we got vector here 126.09. 127.30ish. Looking to see that continue to hold its support. If so, we're going to see cycle into a new bullish cycle, which can mean a break into 129, 132s. We have our 80% currently sitting here at 136. If so, we're going to see another one to get pretty explosive if we can mean a break maintain that vector here as support. We have our 80% currently sitting here at 136. If so, we're going to see another one to get pretty explosive if we can mean a break maintain that vector here as support. Somebody asked about meta. Did we go over meta yet? Or people still need to see meta? Get pretty explosive if we can mean a break maintain that vector here as support. Somebody asked about meta. Did we go over meta yet? Or Antone, hey, if when you're back, just feel free to see meta. I'll hop off. You can get back to your work.
No, not yet.
Somebody asked about meta. Did we go over meta yet? Or Antone, hey, if when you're back, just feel free to see meta. I'll hop off. You can get back to your work.
No, not yet.
Somebody asked about meta. Did we go over meta yet? Or Antone, hey, if when you're back, just feel free to see meta. I'll hop off. You can get back to your work.
No, not yet.
Somebody asked about meta. Did we go over meta yet? Or Antone, hey, if when you're back, just feel free to see meta. I'll hop off. You can get back to your work.
No, not yet.
Somebody asked about meta. Did we go over meta yet? Or Antone, hey, if when you're back, just feel free to see meta. I'll hop off. You can get back to your work.
No, not yet.
Somebody asked about meta. Did we go over meta yet? Or Antone, hey, if when you're back, just feel free to see meta. I'll hop off. You can get back to your work.
No, not yet.
Somebody asked about meta. Did we go over meta yet? Or Antone, hey, if when you're back, just feel free to see meta. I'll hop off. You can get back to your work. Another one obviously is one of the top of my radars is Apple also. Great insight, which is shown on that one. Above that 272, this thing could another one.
Looking for a ripper.
Obviously is one of the top of my radars is Apple. Cross over that wave 7 vector. Great insight, which is shown standard deviation shown around 0.1. Above that 272. Just wait. This thing could for that K signal.
It was trying to K today, but it didn't hold.
Yeah, a little weak.
Yep. Not ready yet.
Not ready yet. Ready.
You just show him Zom from last week going into this week.
Zom's currently pressing into average band, wave 7. So following that bullish crossover vector, initiating new long cycle. So we have with us currently sitting at 126.4 here. So we're just below that 80. So we're really going to need to see that 121 get reclaimed for us to take out, have confidence to take out this 50 and this average band, and as well as this open state 122.50s area. If you're just looking at this chart, it's all systematic. So just like down here, when we're anticipating to find support around that 50% downside, we can. This is a peak area where we can risk exhaustion for that K signal.
It was trying to K today, but
why this average band so strong, in my opinion. Phenomenal tool.
Not ready yet.
You kind of see can anticipate where that exhaustion is going to present. So, my opinion, we stall out around for a couple days, potentially take out that 122.50 open state and that 50% upside. A failure to reclaim 121, you're going to see sellers try to take it down into vector 118.54. That will be make or break. If we lose that as support, we're going to have an 80% chance to pull back into 116.30. That bullish crossover vector. Initiating new long cycle. So it's either we hold 121-ish, target 122. We got a 20% chance at 124, or we hold below 121 and play down to 118.54. So we're just below that 80. Potentially, depending on how we treat vector, can initiate a new bear cycle. Claimed for us to take out, that's a really nice setup. Confidence to take out this 50 and its average band, and as well as this open state 122.50s area. Weekend. If you're just looking at this chart, 120% on that. It's all Meta though. Meta is another one. Just like somebody in chat, we're anticipating to find support around that 50% downside. This is a peak area where we can risk exhaustion. Somebody mentioned Meta in the chat, so we can go over that one. That's all.
It was trying to K today, but
also really nice setup. This average band. So if you go look at Meta currently sitting at 657.04. Phenomenal tool. So we're actually just below wave 7 vector, 663. Anticipate where that exhaustion. So we need to be really careful of that. So if we can't get, we stall out around 63.12 days, potentially take out tomorrow in future sessions. You're going to see this try to generate an M signal. Down here, you see we're reclaim 121 standard deviation, trying to take it down into vector 118. So you can see how 663 is that pivot. It's either we hold 663 for us to have 80% chance to target 673. 681, 696, so forth, into that average band, or we hold below the 663.12, and like I said, have an 80% chance to take out this 641.97, play down to 118.54, just below that 80. And if we continue to below that vector, can initiate a new bear cycle. We'll see that M populate. So those that aren't familiar, M signals, whenever you see, first of all, look where my cursor is. If you're looking down here at the standard deviation area, you'll see these Ks and Ms. So K, for example, is a cycle above pivot and vector. Another one, whenever we get an M, cycle below pivot and vector. To keep it short and sweet, K bullish and bearish. Somebody mentioned, or if you guys have access to the software, have some of the cool features in Algo Fun.
So if
I
you
know
look
you
at
can
meta,
put,
meta
you know,
currently sitting
Mario
at
Smash, and a couple other different
we're
things
actually
on there.
just below wave
Can
7 vector,
kind of
663.
add to that confluence. So we need to be really careful, as well as tying in other aggregations.
If we can't get
above
out,
so that this one, like I said, if we continue and we fail to reclaim 63,
try to generate
you're going to try to generate that M signal, aka we'll see downside above it, we'll generate SOK. So
you can see how 663 is that pivot.
one that we can
we
we
hold
actually go over that
663,
with most recent
to have
swing
80%
was
chance to target
Zom here.
673,
Zom,
681,
I'm just gonna
696,
zoom
so
in
forth
really
to that average band.
quite a
Or
bit,
we
so
hold
everybody
below the
can
663
see the small bit of data we're talking
and
about.
like I said, have an 80% chance to
About
or
so right here,
whenever
whenever we got this crossover, this purple line vector
continue to
on here on wave 7, what did we generate? As soon as we got that crossover,
we'll
what do you see down here at the center deviation?
So those that aren't familiar, M signals, whenever you see
from there, we made a move from
look where my
116
cursor
to
is.
today hit a
Looking
high of
down here at the
121.
center deviation area,
Just following that
you'll see these K's and M's. So it's K,
That was
for
another good
example,
one, BG.
cycle
Go
above
over
pivot
to
vector.
NVIDIA.
Another one. Whenever we get an M, cycle below pivot vector. Keep it
We
short,
hopped in
sweet,
that
simple.
last week. Or
K
we set
bullish,
it up last
M
week.
bearish. Somebody mentioned
Or if you
that
guys have access to same thing. I mean, dude, all these setups. It should get repetitive to you because
Mario Smash.
all these charts are relatively the same,
Exactly.
which I love it. So, same thing. If you're looking at NVIDIA here, you can see, we cycled, bear cycle, spend a couple days within it. Overall, hold support of that 50% downside, as you guys can see. Eventually gave us that crossover vector that was around 175-ish area. Once we got that officially got that crossover of vector, what did we generate?
So we need to be really careful.
Okay, signal down here. So you can see that, like I said, that's a cycle above.
Like I said, if we continue
Pivoted vector,
fail to reclaim
So,
63
above there, we targeted
try to
to
generate that M
80%
signal.
average band.
You
You see, we took out that 80%, kind of fell, saw a little bit of pullback off that 80. Now we're kind of just pressing in between that 80 and that vector. So ultimately on the video, thus currently sitting here at 187-ish. So we're still well north of vector of that 182, meaning that bullish cycle still intact. So right here, so ultimately we're going to need to see PMLs right here at 184 and 98. What do we generate? As soon as we got that crossover on the software down here at the center deviation. For maintaining that, we're trying to take us into 193-ish area. From there, we made a move from that 80%.
Today hit a high of
Failure to hold below PML 182. We started 184, 98. Target down to 182.34.
Another good one, BG.
And then we can see how that respects. If we lose 182 from there, just like you saw with this K signal present, if we were to get a nice close below that 182 or vector, whenever vector appropriates, then we generate that M signal, just like you see right here. It should get repetitive to you because
Mario Smash.
all these
All right,
charts
I'm
are
back.
relatively the same.
Feeling
Welcome
stuck.
here.
My office.
You take it over.
Yeah, no, thanks for stepping up,
looking
BG. I
at the video
appreciate
here.
it.
No problem, man. I love what you guys
Sounds
are
like
doing there.
the minute I record something.
Within it,
Where'd you guys go over? I heard NVIDIA.
Eventually gave us that
crossover.
I went over NVIDIA, Meta, Zom, SMCI, once we got
Uber.
that, officially got that crossover vector. Uber, Dell, SMCI, all three of those are one of my favorite setups. And then we just touched over on Apple again.
Like I said, if we continue,
Pivoted
Oh, nice.
kind of just adding to what you guys
Right.
were talking about.
For any of those names, were you thinking about going longer? Short,
See, we took out that 80%.
Or you just
So
looking at them potentially.
saw a little bit of Uber's bullish setup.
between that
Yeah, I highly recommend checking out Uber. You'll love the setup. Personally, thus currently
Yeah.
sitting. Uber's a nice one. SMCI is a nice one if we can reclaim 30.24. Currently sitting at 30s here post, so we're gonna have to see that reclaim first. That easily could flip with that case signal. Dell's another really nice one when it's almost identical to Uber. Provided on the software. Those are why those are my top three. They're all at 0.1 standard deviation prime off crossovers.
All right, yeah, I'll look at Uber real quick, then Golden's over.
182.
Sure.
Yeah, I want to check that out. So target down to 182.34.
So Uber,
And then we can see
wait
how
one.
that
So which one?
respects. If we lose 182,
One, I guess,
from there, just
grabs your attention
signal
most wave and
if we were to
aggregation,
all
like wave 7.
we're on wave 7, yeah.
Gotcha. Okay. Yeah, so H1 on Uber. Average move up to 88.74. Right below this open state, 87. Yeah. It's looking great. And look at back down to the golden zone, green, K assignment. Throw the bands on. Yeah, we took the break up to the 80% bands. Look at that. So we know we can retrace down to this 80% band that's red, 79. Or we can continue to break higher, like the average move, and hit that 50%, 85. Okay. Is this a position anyone's in, Uber?
So I played this morning. I played weekly 85 calls, which is
Yeah.
pretty cheap kind of play, 9 cents to around like 18 or 19 cents. I still got
Gotcha.
some runners going. I like to pick the 85 strike because that 50% as well as that
Mhm.
average band. So if those
Cool.
runners want to keep doing making some money for me, I'm not against it.
Yeah, right. That's the goal. Yeah, wave 3 looks nice. It looks like it's just getting started out of this golden zone. Yeah. When you see it do a big turn like that with the green, yeah, it's going.
She ready
Let's
for
see.
something.
Yeah. Yep. That's for sure. Wave 10 probably the same as 7. Oh no. So this is just lagging the wave 7. See. Wave 7 H1 after some compression. Okay. And this is soon to have an H1 theoretically. Yeah. Above purple vector. Look at perform the average move basically right there. Tons of support right there. 8% band. Yeah. Is it? You didn't guys go over Periscope yet? Did you?
No.
That's another thing
Nope.
to go over Periscope. That's obviously a great tool for some swings.
Has
Yeah.
Periscope been
L9.
working lately?
Yeah, it has worked for me. Yeah.
Okay. I was trying to find some like recent ones that actually panned out, but just didn't find any.
Yeah. Yeah. I don't know what it is with the Periscope signals, but as soon as you enter, you're up or down right away. It's like really alive, the position. It's amazing. It signals something that's really active and volatile. Yeah, Uber here, H1, definitely gonna happen. Better than L9. Okay. We can go over gold and silver. First, I want to show this again.
Nasty rejection.
Yeah.
Yeah, I was about to say gold just crossed wave 7 vector.
Right.
Yeah, I saw that.
Let's go to. I'm gonna show the big open state on wave 200. 2, 3, 4, and 7. Pull this up. So, as this was called out by Biggin a while back, we're almost there.
Sheesh.
Look at that. I mean, Biggin, who's in this Discord, pointed out somewhere like February of 2025, somewhere in here. Yeah, found this open state, and look, here we are, much higher. It definitely has the velocity, momentum to close this. I would think, right? You can see this little pullback here is really nothing in the overall picture, right? What was it down like 4.5% today? You can see that there, but it'll ultimately continue until it closes that. Yeah, that's something you could probably. I don't know. I don't like taking long calls on this because of days like over here. Remember when gold was down? Like, was it 6% in a day over here? It had some far out on the monies, right? Out in like it would be now January 16th, and it was on the money calls turned to out of the money really quick. So it was not that great. But you could definitely put a reversion maybe after this open state closes. Look what happened here when it closed this open state. We shot a little bit past it, then nasty reversion lower. Now it was something that was open since 2011. This has been open since 2006. 2006, so like 20
Wow.
years, right? You think after we close this open state, it's been open for 20 years, we'd probably have a big reversion after, right? I mean, we had one here after 2011 closed, right? So we had a little pullback there. So a lot of times, not all the time, not 100% of the time, but a lot of times when we close something that's been open for that long, we do see a lot of the volatility right after. So that's something definitely to consider. The standard deviation is not the extreme level. You see here, this right here stopped, or no, was it? Yeah, this open state was created when we hit the open or the extreme level, 11.5 standard deviation. Only at 6.2, so definitely some room to go up to that 11.5 area. So I would not want to be short gold until we see 11.5, the extreme standard deviation level for wave 200. So, but I think silver is a different story. I think the standard deviation is higher on the wave 200. Let's look at that real quick. Why can't I find? Oh yeah, it's right here. I'll look at the shorter term time frames too. I'm just looking at this first. It's interesting. Load this
Nice
up.
below that one,
Somebody mentioned
or
you
if you need
guys
to, or
have
vector,
had
whenever
the same
vector
thing.
appropriates.
Okay.
And we generate that.
Well,
it's
it's elevated a little bit, I
It
guess.
should get recorded to you because
But
Mario Snap, all
it's
these
all
players
right.
are relatively the same. Welcome here. You take it over.
So,
no,
thanks for stepping up, VG. I
Video
appreciate
here.
it. Okay, there's input. Yeah.
No problem, man. I love what you
Sounds
guys are
like-
doing there.
Look at that.
Minute
Record
stuff.
97.07 for silver.
Where'd you guys go
And we're at what?
I heard
72
NVIDIA.
right now for SI equals F. I'm gonna go slow
I went
future.
over NVIDIA,
So,
Meta, Zom,
like 25.
SNCI, Uber.
Okay.
For it to go up 25 more
Vector, Uber, Dell,
dollars,
SNCI,
basis
all
points, or
three
whatever
of
you
those
call it.
are
Yeah,
my favorite setups.
that's
We just touched over on Apple again.
yeah, that'd be a wicked move.
Pivoted
Oh, nice.
kind of just
It could definitely get there. For any of those names, standard deviation's not, the extreme level.
Took out that 80%.
Or it has all the fuel to get there.
Uber's bullish.
It's interesting too. The higher
I
silver goes,
highly
the worse it
recommend checking
impacts
out
some
Uber. You'll
banks.
love
A
the
lot of big
setup.
banks right now,
Okay.
a lot of regionals and investment banks are usually short the future of silver, and it's causing major problems. If you look back to
that
2008
easily could flip with that case study.
recession,
Dell
Bear
is
Stearns
another really
went to
nice one.
default, sold off heavily, mainly due to
Uber.
silver exploding higher when they had a short
Those are
position.
why those are my top three.
And we're seeing that now. Silver explode again, and it's starting to negatively affect banks. So
All right, yeah, I'll look at Uber real quick, then gold.
a lot of stuff can happen after this.
Yeah,
You know,
I'm gonna check that out.
lot.
Target down to 180.
Economically.
So Uber.
So,
Yeah. So which one?
yeah, there's a lot to it.
One, I guess, grabs your
Now, I also posted in the chat earlier.
aggregation
All
on like wave 7.
Fractal target 97. Yeah, long-term swing. Okay. As opposed to
Yeah,
earlier,
so
the
H1
banks are
on,
selling more and
Uber.
more of their assets, so like treasuries and
Average move up to 88.34.
treasuries and mortgage-backed securities back to the Fed in exchange for cash.
It's looking great.
Yeah,
And I'll
alarming
get back
rate.
down to the golden zone.
Most
green,
since 2020.
K assignment.
And they could be doing that
Bands
because
on.
of their false
Yeah, we took the Braves to the 80% band.
positions on
Look at that.
silver. You know, they're being
So,
upside down. So
we know we can retrace
it could get
down
really
to this
spooky here.
80% band that's red,
So,
79.
but lots of
Or we can
opportunity.
continue to break higher. Like
91 is also a target. Wave
that
90.
50%.
That pull wave 100 yet?
85. Okay, is this a
Okay,
position
at
within
93.
Uber?
So there's still plenty of
I
targets.
played
for
this
silver to
morning.
rise to.
I played weekly 85 holes, which is
Yeah.
pretty cheap.
Isn't that crazy?
I played 9 cents for
Yeah,
about
crazy.
18,
It's not done
19
yet,
cents.
right? I mean,
I
it's
still
crazy
got some
too.
runners going.
China, the price in China is like 10, $20 more than our price.
as well as
It's
that.
pretty,
that
it's getting
I'm
pretty
so
crazy.
sorry I'm not muted. Sorry about that.
So if those
Cool,
runners
that's all
want to
right.
keep making some money for me, I'm not against it.
Yeah, right.
I don't know why is it
That's
acting like
the goal.
this. There should be open state
Yeah,
there.
wave 3 looks nice. It looks like it's
It's
just
not
getting
loading.
started out of this.
I'll bring down the days.
Yeah. When you see it do a big turn like that with the green,
Yeah, look at
it's-
that. Wave 50,
it's going.
86.78.
Yeah.
So as we go down
Yeah.
the waves,
That's for
the
sure.
lower the
Wave
prices
10
are
same
for
as
open states.
7. Oh no.
Um,
So this is just lagging the
you
wave
can see
7.
that.
See.
Yeah, so
Seven,
look at
each
it's almost
one.
there. It's after some compression. It's definitely gonna. From
Okay.
what I see, it's
And
probably gonna
this
hit
is
that.
yeah,
I don't know when,
soon
but
to
at some point.
have an H1
Because
theoretically.
look at the standard deviation level. It's elevated
Yeah.
3.3, but it's not.
Purple vector.
Look at
Perform the
extreme.
average move basically
So
right there.
I mean, it could
Tons of
compress a little
support
bit
right
like fear,
there.
but I still think it's gonna close that open state.
8% band. Yeah. Is
Wave
it? You
20.
guys go over
see what we
Periscope
got.
yet? Did you?
Probably the more days for this
No.
one.
Another thing
Nope.
to go over Periscope.
Let's see,
It's
10,000.
obviously a great tool for some swings.
Something that's so volatile like this, I kind of just want to
Yeah,
stay out
Periscope
of
been
mind.
working
Touch
lately?
it. I like entering like swing
yeah, it has
trades,
worked for
like
me.
where the stock
Yeah.
is.
Okay. I was trying to
Um,
find some
just like going sideways,
recent ones that
not too
actually
volatile.
panned out, but
Implied
just didn't
volatility
find
not
any.
too high. Enter when the
Yeah.
implied volatility is low, and then
Yeah, I don't know
have
what
some
it is for
implied volatility
Periscope
enter,
signals, but
and then
as soon as you
sell when the
enter,
premiums
you're
are
up or down right away.
overpriced.
It's really aligned.
That's ideal.
The position, you know.
Let's see, wave 10.
It's amazing. It signals something that's really active.
Let's bring us down.
Volatile.
But
yeah,
yeah,
over
definitely.
here,
If you go through all
H1,
the smaller ways, it's
definitely
definitely overextended.
better than L9.
But just because it's overextended doesn't mean it's
Okay.
gonna immediately correct. Things that are
go over
overextended
gold,
usually continue to
silver.
make more
First, I want to
overextension.
show this
Had it
again.
So
past years, actually.
yeah,
Yeah, I was about to say gold
once
just
it
crossed wave
becomes
7
an
vector.
outlier, it'll stay an outlier for
Right.
some time.
Yeah, I saw that.
Yeah.
Let's go
Let's see.
to-
I can look at
I'm gonna show the big open state
GLD
on wave 200.
again.
2, 4, and 7.
Shorter term. Let's look at wave 7.
So,
Okay.
as this was called out by Biggin a while back.
Let's look at
Almost
that.
there.
Anytime you see price break
Look
out
at
this
that.
gray,
I mean,
percent area, it's going to be an outlier
Biggin
to
this
the upside,
Discord,
or it's going to immediately revise.
Point out somewhere like February of
And
2025.
it's revising.
Somewhere
Vice versa
here,
for
yeah.
here. GLD
Found
wave
this open
7, 20,
state,
50.
and look, here we are.
As in
much
50
higher.
minute? Or no. I'm stupid.
It definitely has the velocity,
60 minute, 50
momentum
minute.
to
50.
close this.
Okay, got you.
I would think, right? You can see this little pullback here is really nothing in the overall picture, right?
Daily.
What was it down like 4.5% today?
10
You can see
or
that
20.
there, but
It was.
it'll ultimately
Similar
continue
to wave 7.
until it closes that. Yeah, that's something you could pay. I don't know. I don't like
See.
taking long calls on this
Let me zoom
because
out actually.
of days like over here. Remember when gold was down? Like, was it 6%
I,
a day?
I immediately
Over here.
see
It had some far out on the monies,
something
right?
like
Out in
this.
like
Right.
now January 16th, and it was on the money calls turned to out of the money real quick. So
Yeah,
was not
trend
that
there.
but you could
Yeah.
definitely put a
And that's the end of that trend.
reversion maybe after this open state closes.
So
look what happened
only
here.
20%. So
When
I'm
it
guessing
closed
here,
this open state, we
you
shot
can
a little bit
see
past it, then
revised down to
nasty
8% band right here,
reversion lower.
399.
Now
Get
it's
some red
something that's
starting there.
open since
You look at the options
2011.
analyzer. Right, so only a little more
This
days.
has been open
Actually,
since
this is 200 days only.
2006. 2006, so like 20 years, right? You think after we close this open state, it's been open for 20 years, we'd probably have a big reversion after, right?
Just get rid of
we
those
had one
lines.
here after 2011 closed, right?
Okay.
So we had a little pullback there. So a lot of times, not all the
All
time,
right.
not 100% of the time, but a lot of times,
For the
when we
high
close
of
something that's been open
21,
for that long, we do see
it goes immediately from 21 to
a
31.
lot
It's
of
a big,
volatility right
32 is big space.
So
One
it's something
occurrence of
definitely to consider.
32.
The standard deviation is not the extreme
Yeah, like I
level.
said, down
You
to
see here,
the 80% band, which would be like
this
L1.
right here stopped.
It's pretty
Or no, was it-
probable
Yeah,
in the
this
future
open state
here.
was created when we hit the open or the
This 21's
extreme,
above the
level,
average percent, above
11.5
pivot.
standard deviation. Only at 6.2, so definitely some room to go up to that 11.5 area.
And wave 50.
So I would not want to be short gold until
Yeah, so we have this
11.5, the extreme standard deviation level for wave 200.
455.46
So,
open state.
But I think silver is a different story.
You definitely see it come down
I
and
think
test
the
the vector.
standard deviation is higher on the wave.
You see that a
200,
lot.
so
Or sometimes it'll break through and then come back up like it did right here.
I'll look at the shorter term
vector
time frames
continue,
too.
staircase up.
This first.
The vector staircase is up after we break below it. Price likes to return back up to it and recapture it. Hold this
Nice.
up.
A close border. That went
Yeah.
to or vector whenever vector appropriates.
Percent
I'll
bands.
generate that.
Well, it's elevated,
percent.
I guess. So I don't know. It's hard for me to say what's gonna happen in here, but I think we stay long on gold until that 47.50 closes on wave 200. Okay, there's yeah.
No problem, man. I love what you
I
guys
was
are
like,
doing.
look at that. Record stuff. 97.07 silver.
All
right. What
I
else?
heard
72 right now for
What else should we look at?
I've went over Nvidia,
So,
Meta,
like
Zion,
25. I think
MSCI,
Intel was one.
Okay.
For it to go up 25
Actually, I think I have a trade.
dollars. Yeah, every gold or whatever you call it, pivots to dip by. That's yeah, that'd be a wicked move. It's not done until like 47.50. So and maybe beyond, right?
For any of those
It
names,
totally
standard
happen.
deviation's not,
We haven't seen a huge flash crash in equities, right?
It has fuel to get there.
Back in 2008, we've seen the biggest update of gold.
It's interesting too.
It was
The
like
higher silver goes, the worse impact
10% or something, 10, 12% when equities sold off heavy in one day, 10%.
banks are
So
usually short the future of silver.
and it's causing definitely see some like
major
that in the
problems.
future.
If you look back to 2008
I did say Intel, where's
Airstrip went to default, sold off heavily. Mainly
right
due
here.
to silver exploding higher when they had a shock
Those are
position.
why those are my top.
Yeah.
And we're seeing that now.
Yeah, see, yep,
Silver
wave
explode
7, that's
again.
exactly what I was
And it's starting to
negatively
Mhm.
affect banks. So
All right, yeah, I'll look
I
at
don't know what
real
those
quick.
lines are.
A lot of stuff can happen after this.
Yeah, I want to check that out.
A lot.
Yeah, so
Uber.
immediately what I look at here is
So which
yeah, there's a big compression cycle.
I guess
No, we did not close the double bottom, but
like wave 7.
obviously you're not gonna close that
Gotcha.
in this cycle. We're at H1,
Earlier, the H1
and the average move has us right here.
Their assets. So
Yeah,
like
the average move,
treasuries
the blue
and
line meets this
average move
gray average
treasuries and
mortgage-backed securities
back to the
So,
Fed in exchange for cash.
and then we had this K here.
So
It's
it's
just getting
warming
started.
down to the golden zone.
Most
green,
people like to see it break out.
something
Like over
and they could be doing
over
that
here.
because of their fault.
or
Yeah, we took the branch to
over
the
here.
80% band. Positions on
Um,
silver, they're being upside down.
let's add some more days
So
real
we can
quick.
It could get really spooky here
At 500.
but lots of opportunity.
Yeah, it is. Looks
91's
good.
also a target, wave 90. 50%.
That purple 800 yet?
5. Okay, is this?
Yeah,
Okay,
so
93. So there's still plenty of targets.
70% odds.
Silver to
Live
grab.
currency is H2.
85
Yeah,
Yeah,
that
what was the main currency is L1.
It's not done yet, right? I mean, it's crazy too.
So,
The price.
yeah, this could
China
definitely be
is like
getting
$10
started
more
above
than our
pivot.
price.
I think it is.
It's getting pretty
So
crazy.
sorry, I'm not muted. Sorry about that.
Let's see.
If those
Cool,
runners
that's all right.
keep doing
I
significant runs for me, I'm not
see.
against it.
Let's see here.
Yeah, right.
This low, this
should be
low.
open state.
I like to draw lines like I did.
Looks like it's
not
just getting
loading.
started.
Trend line. I'll bring down the days.
Yeah. When you
Let's
see
look
it
at
do a big
wave
trend like
10.
that with the green,
Yeah, look at
it's-
that. Wave 50.
it's going.
86.78.
Yeah.
So
as
kind
you
of
go
lagging
down
the wave
waves,
7 there.
the lower the
It's not
trends
H1 yet, but
stays.
we can assume that
So this is
it's
just
looking
lagging
like
the
it.
wave
You can see
7.
that.
See.
That will. Came down to the double bottom area.
Okay, that's almost there. It's after
Looks
some
like it's done
compression,
compressing to
definitely
me.
gonna-
From what I see, it's
and
probably
this
an
is,
average move has over
I don't know
here.
when, but at some point have a H1.
Percent bands on, yeah, to the 80% band.
Elevated 3.3, but
pretty
it's
good
not.
move.
Vector.
I mean,
Look
Intel
at
stocks
extreme
at
average
what?
move, so right there. It can compress a
36.68.
little bit like here, but I still think it's
So
gonna
even the
close that.
838.37, $2.
And yeah,
Pretty good move.
Is it-
Wave
do you
20.
guys go
See
over
what we got.
Periscope
Something
yet?
I'd play. If I had to add more days for this
No.
one. Let's see.
Over Periscope.
Let's see.
L9
L9
great tool
for
for
wave
some
10.
swings. Something that's so
L13,
volatile like this,
14%
I
odds,
kinda
2
want
clicks
to
there
touch it.
compared to
I like entering
H1.
swing trades like where
Right, so
stock is
definitely look like more
find
odds
some,
for
like,
this
like going
H1
sideways
recent
and
ones that
not too
rather than
actually
more
volatile.
panned out,
lows.
but
Implied
just didn't
volatility
find
not too high. Enter when the implied
So,
volatility is low, and then
yeah, I think this one looks good for
don't know what it is
upside.
about Periscope,
Enter.
signals, but
And then
as soon as you
sell when the
enter,
premiums
either go
are
up or down right away.
overpriced.
Really align
That's ideal.
the
Look at wave 3.
position,
K there.
See,
Wave 10.
It's amazing. It signals something that's
Average move not performed. Yeah,
active,
it's bringing us down.
Yeah, definitely. If you go through all the smaller ways, it's definitely
This looks good too.
But just because it's overextended doesn't mean it's gonna immediately correct.
So,
Things that are overextended usually
all right, what else?
continue to
Now,
make more
show.
overextension. So
I know some people were treating Google or thinking about buying Google calls.
Let's look at wave 7 daily. Okay. The high of a 3. We have not performed the average move of pivot yet. Usually we do. This green standard deviation print's kind of consolidating. We've been in the K for a little bit. Let's look at options analyzer. When I see a bunch of ones, like I said, I want to add more days. I only have 200. Let's add 500. Okay. So it drops by a little bit. Occurrences almost half for L4 compared to L1. Okay. So it drops by a little bit. Occurrences almost half for L4 compared to L1. It doesn't always have to perform this average move with the blue line. Okay. A lot of times it doesn't. So you can tell if it will by just looking at this standard deviation for L4. The fact that it's flat right now shows that it doesn't always have to perform. It's showing what the price shows right here. It's been kind of consolidating. A lot of times it doesn't. So you can, it hasn't been really explosive at all by just looking at this standard deviation. Did I click on wave 3? The fact that it's flat right now shows that. Okay, so it's showing what the price is. Wave 3. It's been kind of consolidating. A lot of times it doesn't. So we know we're in the M here. It hasn't been really explosive at all. It's still in golden zone. L1. Wave 3. The fact that it's flat right now shows that. Okay, so we just had a high of wave 3. It's been kind of consolidating. So 5. M here. It hasn't been really explosive. So you definitely see some more downside here. L1. Gold months out using wave 20. Yeah, I'll do wave 20. No. Okay, so we just had a high of wave 3. It's been kind of consolidating. So I'll do. I did wave 7. I'll do wave 10 real quick. See some more downside here. Yeah, so this is looking for wave 20. Yeah, H1. I'll do wave 20. No. Okay, so we just had a high of wave 3. I'll do. I did wave 7. I'll do wave 10 real quick. See more downside here. Yeah, so this is looking for wave 20. Yeah, H1. Wave 20. No. Okay, so we just had a high of. Yeah, look at that. I mean, looks like we have a H1. I did wave 7. I'll do wave 10 real quick. See more downside here. Yeah, so this is do wave 20. Okay. Interesting. So anytime you see something like this, doesn't always mean it's gonna continue lower just because it's right here above the pivot, but it definitely may. I mean, we look how long this K has been going for, the expansion phase. K is an expansion. It's been expansion since October 15th, and we're back down to golden zone. Look at the options analyzer. This is interesting. I don't know. A little confusing. High 30. Man, this is for 1,000 days. There's only one occurrences for all these. So I think we make an H1 here, or L1 here. To this 8% band. Yep. And there's a double bottom there. Something to look out for. Wave 50. Let's see if there's anything up here. We gotta add some more days sometimes. Okay, look at that. It just closed the open state. That was open since 2021. And you see what happened after it closed? Went up a little bit and then strong compression. Doesn't mean the cycle's over, but like I said a little bit ago, after you close the open state that's been open for a while, we do tend to see some sharp compression right after. But it doesn't always mean the expansion cycle above pivot's over. It's definitely targeting something when we add more days. Let's see, nothing there. Only one imprint there. Look at that. So just because it compressed after that open state, it closed from 2021. Like I said, doesn't mean it's over, especially because we see this 339.89. Look at that. And that's been open for, let's see, let's go way back for a while. 2010. Oh, it's too much. That's fine right there. So this tells me on a longer term, week over week, month over month, the flow of this stock, it's flowing towards the 339.89. And it's going to keep going until it closes that. So I would expect that to close. Standard deviation is not too crazy at all. 0.8 is a little extended, but it's reasonable. It definitely has the velocity to get there. What high is this? 128. It's interesting to look at. Oh, there's a lot there. Doesn't really matter, but let's see. There's a 267, 208. So 128 high is not crazy, but it's pretty extended. Such interesting to look at. Wave 100. Same thing. 388. Let me pull up one of the graph features. Graph settings. Pull on average pullbacks. It's just interesting to look at. Average pullback shows the 319. Percent bands, 5 and 10%. Yeah. It's definitely targeting those.
Hey, Anton.
Yes.
Oh, you can hear me? Okay. So yesterday in that Sunday morning session, we were looking at the wave 20 and we went back 500 days, not even 1,000. We left those average pullbacks on. And it was showing that near term, we may have that initial pullback. But if you look left, these pullbacks are short. They're not even out of the average band, each of these dips, other than the big ones followed by the even bigger ones. So if that were to occur, we'd be pulling back as far back as possibly 291 and then seeing as high as 320 by January 8th, according to that. So that's where it was a near-term trade would be the short. And then if it pushes past, you could go as far down as raise that back up, looking left. That open state there, the 221. That's crazy though.
Wow. Yeah.
So I always say everything's crazy, but 291 is reasonable. It's within the average band, right? So using these average bands, people can really dial in on their system and say, okay, well, maybe I want a long term or a short term. Right. So the near term would be at the pullback. If it refuses and continues support, then we could see as high as 320 and then of course beyond.
Right. Yeah, good input. I mean, I would expect it to maybe perform this average move here with the line.
Yeah, I think what we did was we put those, with the average move, you can put the individual waves on.
Okay.
I have it like a hotkey, but you can actually see what keys are, what waves are making up the average. And in this case, I think there was, it's the projection waves. I'm pretty sure that's it.
Wave projection bands.
Yeah, that's it. Yeah, that's it.
Like this here?
Yeah, so those are the waves that are making up. Oh no, those are targets. But anyways, if you want to see what is making up the blue mean wave, you need to put on the wave projections, and that shows you every individual wave that makes up the blue mean wave. And those showed some real outliers. So not to interrupt, but since you guys are talking about this trade, there's actually 2 trades that we were looking at yesterday with this. And I think the people that were in there picked it apart for at least an hour. It was pretty cool. Yeah.
Yeah.
Google's very giving in the market too, because it's so sensitive to catalyst and news and fundamentals and things like that.
Right. Yeah, like we said, I would expect downside. At 291 is very probable. Make it a double bottom, right below the 3% bands. But I don't expect Google to fall apart or sell off sharply. We know Warren Buffett's an investor now. They're competing with Nvidia. They have tons of CapEx. They just keep beating earnings and earnings. So, yeah, it could be something to go long off of too. Once we see a pullback to 291, I know some people will put like a buy stock order in at like 291 here, and just see if it goes through or not. Yeah, definitely something there. Okay. All right. So we went over Intel, went over Google, I went over PayPal, Apple. Let's see what else we can go over. Oh, I wanted to show. What is it? BRKB, Berkshire Hathaway. Do I have it still? This is really interesting. Okay, was it? I think it's dash B. Okay. It was like 1,000 days of load. Okay, was it that one? Or was it? Okay, look how far in the golden zone Berkshire Hathaway is. It's been like this for a little bit. Look at all these assignments. MK. Doesn't know what it wants to do, expansion or compression, but all showing greener. Look, it's at the very bottom of this golden zone. I mean, it flipped from M to K pretty rapidly. Could be something there, a big squeeze either way. But same with 200. Look, it's been down here for a long time. Open state there. Right on vector. Yeah, look at that. It's crazy. But we know at some point the stock will make its mind. It'll either gather the fuel to hit that 542, or it'll come down and make an L1. Had a 520 high. Got open state there at 468. This is something that caught my eye not too long ago, and I wanted to share. I mean, look how long it's been in the expansion phase since 2023. Above pivot on wave 200. So, yeah, for a while. I know Warren Buffett's retiring, basically step away from the company. Maybe something negative happens and there's a big compression cycle. Who knows? But just another thing to look at. We go over Netflix. I have that right here. A lot of guys in here looking at Netflix. Let's see. 5 more days. Okay. All right, so that's interesting. We got an H1, and there's a K there, and immediately got an M assignment. Kind of interesting. It might not have the fuel to keep making more highs above pivot, and comes back down here, makes L1, then follows the average move. Still in golden zone though. Wave 7. Wave 20. Okay. Kind of be a 2% band somewhere in here. Yep, right there. Right, all the support. We know it's been compressing for a while. What else?
44 low. Look at that. I'll add more days. Get a better look at this. It's really kind of sold off here. This could be a rebound play. Yeah, look at that. Nothing recorded after that. H1. I'll add even more days. Let's see. 48, 53, all low odds compared to this. It's overextended to downside for sure. Let me look at the. Yeah, look at that. But we know with Netflix, it can stay in compression for a while. Look here, 2021, after bad earnings, compress for a while. I remember the same pre-split. Let's see. You see it's kind of consolidating here. Just trying to figure out if it wants to expand higher or lower again. This vector continues to come down. Wave 50. I'll show the same picture. Look at that. 2% band, or 20%, 10%. So yeah, I could follow the average move here. Wait, 200. Look at the bigger picture. Yeah, we really broke under vector by a lot. Vector is stable. Suggests that price could return back up there. Yeah. So I would expect maybe Netflix to turn around. Look at Novo. I posted about that before. This become maybe a longer play. I mean, this thing's been really beaten down for a while. It's crazy because for Novo Nordisk, this drug manufacturing company is headquartered in Denmark, and most of Denmark's economy relies off Novo's performance, business-wise, stock performance-wise. So it's definitely a lot of pressure there for management to do something great here, right, at some point. I think maybe 50. Yeah, okay. I know this was down today. Yeah, look at this. Obviously, gather momentum to go for H1 soon here. Yep, right above, right at the 50% band. So this is something that could be a rebound play. L24. Yeah. We'll get the H1 pretty soon here. And look at the short time frames. Wave 7, maybe a little overextended. It sold off a little bit today. It may continue. Yeah. Looks like that M just getting started. Yeah. So, yeah, this is something maybe mid to long term basis. What else we got? Let's start looking at names. I know UPS is another turnaround story.
PanW.
Let's see. What's that?
PanW.
Yeah, I mean, we can look at that again.
Already will be
It's
found.
so valuation wise, it's a little over valued, I think. What do I look for in how I trade? Milk asked. Good question. I look for compression expansion is the first thing I look for. Ever since I learned that, that's always what I look for. Like, look right here. See this? Strong compression here. Oh, this line's not drawn. This line is not one draw, but you get the point. This is strong compression right here. So I always look for compression first, and then I know there'll be soon expansion after. My fractal's kind of glitching. Hold on, let me reload this. Yeah, so right here, strong compression, and I know the compression was kind of overextended. So with that being said, I could expect soon expansion, and with expansion, be more specific upside. And if I'll zoom in a little bit, we can see, yeah. I mean, look at how the length of this red print standard deviation is M. The longer it compresses, usually the sharper the expansion in general. And we can see that happen here. You kind of compare it to 3D. You know, the longer you hold a spring together between your hands and compress it, the sharper it'll expand out. Right. So that happened here. Same physics there. Expanded pretty sharp there, but it didn't last that long. But still, it was still expansion higher. It was a really good compression expansion on Merck at one point. Drone company. This is something I'd go long on stock. I wanted to, never got the chance, but this had good compression a while back. I wanted to enter, I just forgot about it. Yeah, look at this. I think I might have even had a buy order, but never went through. Maybe after this right here, I had a lot of confidence on this, and it played out well. Look at it. So I think it was around back in here, in October 20th. I saw a strong compression here, day over day, or mostly day over day downside. Right, it came all the way down until it hit the purple vector. Right, and then we had some support, obviously rebounded. And then that was my sign that this thing is going to continue higher into this open state. And it did. I mean, it came back down, tested the vector again, but still, look at that. Look at that expansion there. It ran like 10, 15% in like a week or so. Yeah, I was going to put, I think, a couple grand in some on the money calls, or I don't know, a little bit out of the money. What was the stock at? 83. It was like 90 calls. That couple grand would have turned into over $25,000, $30,000 just from this right here. You know, in a matter of a week or so. It's pretty big stuff. Yeah, I guess I had bad luck to not be able to capture that one, but that's all right. There's plenty of plays out there.
Hey,
It's getting kind of close to
Anton,
stream level. Go ahead.
you're talking about your trade. One of the questions was, what do you look for in how you trade? So since you're kind of recapping the trade you wanted to take, when you're looking to take a trade, how far out are you going? So what charts would you be using to apply to those timeframes? For example, like if it was a near-term trade or a long-term trade, could you recap it in that way, like saying what, and also looking forward, is this looking like a trade setting up, or it's a wait and see?
Well, I guess I look at the overall name I'm trading, the underlining. Merck is something I'd like to be long for a while, so I'll definitely buy a call that's a little further out. Let's say like a month out. I don't like finding time decay. I don't always go for a huge risk to reward. I just like to be right and not fight the time decay. So a lot of times in places stuff like a month, like 30 days out. Once the contracts get to 30 days or below, the theta really kicks in. Time decay really kills the premiums. I don't want to deal with that. So this is back in October when I found this. I was looking at January 16th, which was a couple months out. Because I was fine with being long this name because it's a perfectly safe name. If the name is not something I like to be long, then I'll do something maybe shorter term, like a weekly or something that's like the following Friday, right? And just try to go for an in and out trade. But yeah. So that's basically how I view that in terms of like timing. If that hopefully that answers that question. There's another question asked.
Yeah, the other question was, could you simplify what makes good compression? And you were showing that in the
Yeah, that's here.
beginning of this.
Yeah, so like I showed Novo a minute ago, on the wave 3 or whatever it was. Good compressions, like this good uniform, all red candle downside, day over day, like nothing too crazy, just like this. Like I'll draw a line. Stuff you can draw a line on like this. That's good compression to me. Came down, hit that purple vector for support, and really went up. I mean, you could have made good money off of just these 3 candles alone. This is the daily, obviously. It went from, what was this, 83 about to 88. That's pretty big, for Merck at least. If you had took something like a week or 2 out, you could have really made a couple 100%, I guarantee. Yeah, I mean, I didn't have in mind for a big play like that. I just, it was something I just want to be right on, and that's why I took a more conservative approach to it. But you can definitely make great money just off of strong compression like this, and just the following expansion days after. Because we can see too, if you had a short dated call, we consolidate here, then we went back down and retested, right? So if I found this at October 17th and I had something expiring, November 3rd, it looks great right here, but then it consolidated and went back down, right? So that's always something to consider too. It could always retrace, come back down, test the vector again or multiple times. That's why I took January date. That was my plan because I didn't know I knew it was going to expand after this compression, but I didn't know was going to consolidate. I didn't know how much it was going to expand up, right, and how long. I knew there'd be a big expansion cycle above pivot, but I didn't know would it be straight up like right here, or would it go sideways for a minute and then go up. We can see here, expanded up a little bit after compression, and then this is basic compression too, really. Back down purple vector, then ultimate expansion. So yeah, something you just gotta look at. There's compression expansion everywhere. Yeah. So that's how I'd look at good compression. There's some other examples too I can find. Um, I think Visa had good compression. Let me look at the linear chart too. Yeah, see on the linear chart, there's good compression. Yeah, this can probably kind of throw you off. I could enter here, hold it for a while, and then get stopped out right here. And then it shoots all the way up. That's the tricky part. So that's why part of the reason why I wanted to pick out a bigger date, not being worried about near-term volatility like this whole area right here. But I didn't know after this compression it would expand at some point. I didn't know it was going to expand that much. I wish I did. Wish I took that trade, but that was something I wanted to take. I was very confident on, and it worked out. There's definitely some other examples I can show. I have to find them, but I think Eli Lilly had some good compression expansion examples. Johnson Johnson maybe. I'll have to look through them. I can find some other examples too. I think Intel had a good. Let's look at the linear chart for Intel. Let's see. Yeah, kind of. I mean, this from here to down here is compression, and then expansion higher, more compression. Now it's consolidating, and now there'll be expansion one way or another soon here, and we have a K here. I think this is going higher. Yeah, I think Intel is something you can go long on.
I think BG is pointing out that on the wave 7 chart, you can see the K is down in the golden zone.
Yep.
He was showing it in chat.
Mhm.
That would be a good one to look at. The wave
Yeah, for
7
Intel.
daily.
Right here. Yeah, right here, right? Wave 7 daily, K. Yeah, this looks pretty good. Yeah, if what else are you guys looking at? I can share or go over or talk about. I'm gonna start writing this stuff down. I'll go to my Figma. Like I said, we'll write down, keep track of everything we're looking at. Let me change my screen. So just put text box. So we know we got Intel Wave 7 daily. Upside. What else was there? I showed that METC stock was upside that PayPal. That was like wave 7, 10 daily upside. So I'll first write down like names and setups, and then we can go look at the option chain, and then figure out what we would pick options wise.
Yeah,
No,
that
Apple
one
was
or
one.
two.
Right? Yep. Well, what wave was that? 7, right? I think
Yeah, let's
yeah,
go on
Apple
wave
wave.
7.
Yeah, Apple wave 7 looked good for upside. Okay, so we have 3. There's some other ones. Actually, I want to show. I'm gonna go to a different website real quick. This FinViz. Sometimes gonna look at. What was it? Costco. Okay, can you still see the screen? Yeah. Okay. Look at this. So this is another view of compression, but on a longer term on the weekly chart. I would take this top right here all the way to current price. It's compressing, right? You can kind of draw a line here. It's a long week over week, month over month compression cycle for Costco. Yeah, see that compression there? Yep, this downward channel. And you else had compression and expansion? Lily. Was it daily or weekly? Yeah, weekly. Kind of more volatile, but it's been, you can draw a line, it's been kind of compressing for a while. Sold off here, then a huge expansion phase there. Look at Intel. Daily. See this kind of compression right here. Right, kind of like here. Then we had some, I call like M to K area. It's like going from compression to expansion. That's what's happening right here. So we see some more expansion there. I think another one was Vistra, nuclear power plant company. Look at this compression. This is weekly candle compression. I'm thinking we could probably see expansion phase like this. Look at compression, expansion, compression, expansion. There's another one. Oh, daily. Yes, this is kind of compression. See this purple line? Compression. And then now it's kind of leaving this cone area. There's gonna be expansion soon there, I think. So, yeah. I'll go back to Figma. Okay, so we have these. So for the sake of entering something as a team and go over it and voting on it, let's take these three, right? And now let's narrow it down to one, right? So all it takes is being right on just one trade for, to make some money. Because when we had multiple trades going, one could be going right and the other two could be going bad. And then now we're negative. So we only gotta be right on one to have a good, have a home run, right? It's Intel, PayPal, Apple. You guys can say which ones you want to narrow down to, which one you would take, but we all think there's be upside for all three, right? Right off the bat, we know that Apple probably has more, a bigger possibility of going up before PayPal because PayPal has been a long beaten down cycle, right? So PayPal has been down for so long that it's going to continue making more lows until something really good happens, right? As for Apple, the market could be down big and people rush to Apple for safety. That's been a historical thing. So maybe PayPal is something we can rule out, right? Because it's more risky, right? It's been in a downward cycle for a reason and for a while. So we need something good for PayPal in order to make a trade in that. It can still work out, but I'll just say, for the sake of this, we can just cross it out. Okay. Now we're down to these two, Apple and Intel. Now I'm walking through like how I take a trade right now. I take a bunch of potentials. Oh, I didn't even look at these. We'll forget those. Let's narrow it down to these three. This is what I do. I have a list of stocks that where I see compression expansion on. I go on check the fractal of it. I go check the technical stuff, the non-technical stuff, the news stuff about all these tickers. Read about them, and then I write them all down on paper. Oh, sorry, I cut out there. Then I just start going through which one am I more confident with, and which one's my least confident with. So 1 second, I get a phone call. Yeah. So now we're down to Intel and Apple. Which one do you guys think? Because we're only gonna pick one. We only need to pick one and be right on one to have a home run trade. Not gonna do both. Which one you guys can type out? Which one would you rather enter off the things you see and believe in both? I can go back in the fractal, but let's see. I really think both have upside, right? But we're gonna pick one. It says Apple. I don't know how to do a poll in the chat, but if someone could pull up like a yes or no, Apple, Intel, be great.
We could just say, hey, everybody, in the next 30 seconds, just leave a comment for which one of these trades you want to see in depth and put together like something actionable. I think BG had something to show too,
Okay.
a little
Yeah, you can
extra
go
to
ahead.
show for Intel. BG, are you good to go for a stream so we can add it in before the end?
Hopefully he's still there.
I don't know if he can hear us. He's here. I don't know if he can hear us though. Okay.
Yeah.
Well, if
Give
he
him a minute.
pops in,
Yeah.
we'll defer to him for a minute. But yeah, just give everybody a minute. Somebody said CES in January
Tell like
over the Intel Panther Lake release. I don't know what that means.
um
Apple.
well, we can look at the physical world of things, like news headlines about both. We could speculate what good and bad could happen. I know Nvidia is taking a stake in Intel, right? That's a thing. And Nvidia officially invests $5 billion in Intel What's the next for the chip giant? So if Nvidia has 5 billion in Intel, why would we want to be short, right? We could probably expect good things to follow, right? And it was up all day today when the market was down a fair amount. It was a little volatile, but that's usually a good sign to me. Intel's upcoming processor family release. Okay. Oh yeah, CES show. Okay. Yep. I thought it was like a ticker symbol at first. CES show. Yeah. Yep. January.
Consumer
Yeah.
electronics show.
Yep. Gotcha. Cool. Yeah. Good to know. Right. You always got to factor in not just the technical stuff using the fractal, but also what's happening in the real world for both. So we know that CES show, Nvidia 5 billion stake is official. We also know that the U.S. government has a stake in Intel, right? So this thing's been beaten down for a while with the 5-year, with the all-time chart, 5-year. This thing could be, in the process of, turning around year over year, going higher. Let me do the same for Apple. Nothing much news-wise for Apple, I don't think. Yeah. Let's look at this chart, the linear chart. It's been pretty sideways or consolidating since December 16th. I don't know. Every time, first glance when I see it go sideways like this, I always think it's going to gather some strength, go higher. Or sometimes it will go higher first and then sell off. Like this right here. Like it'll go up a tiny bit and then sell off. It always does that. Like this right here, sell off. So it went kind of sideways right here, dipped a little bit, then went higher. But yeah, we'll pick one of these. I'm not sure what could happen news-wise for Apple. It seems like we know more for Intel. Gosh. Let me look at
What I tend to notice.
Go ahead.
What I tend to notice with these Wave 7s is, especially really just using the fractal, is I will see like a crossover and like kind of before it happens or before we get that MRK, and then we'll see some sort of headline.
Pretty crazy.
Like, it's funny and kind of just the proof's in the pudding. But I've seen that occur many times throughout the years of me using this, which I wouldn't be surprised again if that's another scenario.
Right. Well, I'm gonna keep studying both, but for the sake of this, I'm gonna make a decision tomorrow and place a trade on one of these. I think they're both going higher, but it doesn't matter. We got focus it down to one thing, and it's gonna be Apple or Intel.
So, when you're finished, I'd like to go over Q for tomorrow and kind of into the rest of the week.
Yeah. Let's just do this. People write in chat, Apple or Intel, and then you can go ahead and start your thing. Be great. I'll take a break for a minute. If you're ready, BG.
Yeah, whenever.
Cool. Yeah, go ahead. I'll start my stream.
Stream's going. So already running, going over my wave 1, wave 10, wave 7, and overnight ceiling here on Qs. So make sure everybody can see my stream first of all. There we go. So started on intraday, more intraday. Wave 10, we got Vector here at 620 area. Wave 1, we got Vector still 620 area. And then we have our PML at 619. So what I like to do personally, kind of my own little style to stacking the different aggregations as confluence. So we can see we have wave 10 vector 620s. We have wave 1 vector 620s. If I go run our overnight ceiling and floor values real quick so you guys can see what I'm talking about. I already did that. Values at 619 for our PML tomorrow. So I can take those three, the 619, the 620 to 619 area, and kind of use those as a market giving pivot point. So going into tomorrow, if we see we're trading at, we're holding at 618, meaning that we've broken below wave 1, wave 10 vectors as well as PML, then we can start seeking lower into floor and so forth, or vice versa. If we're holding north of those, then we can start seeking into our ceiling. So here is our overnight values. So for here, like I said, we had PML at the 619 area. So just stacking that as kind of with additional pivot points with that wave 1 to wave 10 vectors. So if we're holding south of that, like I said, we're going to try to seek lower into this floor. Our overnight floors here at 614. And vice versa. If we're holding 619 to 620 as support, then we're going to see a grind up into our ceiling at 625-ish area. One thing I want to is super important for tomorrow. So we have floor at 614. And then if you go look at our wave 7, you can see we have vector here at 616. So outliers are always possible. We've all in here, I assume most of us in here have used the exclamation mark MM or actually run the software to get those values. So we can see those reversion percent. But we got to be mindful. We got wave 7 vector here on Q at 616.52. So overall, to keep this, average cycle of 23 days intact for this new wave 7 bullish cycle we just started, this 616 is going to have to hold. So I keep that as kind of like, a super important level for me. Say we play downside into, targeting down to floor tomorrow, we can see that, if we're taking out 614 floor, then that means we have to cross wave 7 vector to get to there. And so that could potentially initiate, a couple of days of pullback if we were to lose that as support. And as you can see, this wave 7 here, 616.52. Below there, we have an 80% chance to pull back into 607 and so forth. But you can see kind of how we just going off this wave 7 alone, we're kind of just compressing into this vector and this 80%. So it's either we, like I said, fail to hold PML, 619, pull back into vector and potentially our 614 floor, or we hold PML, we hold wave 1 to wave 10 vectors at 620 area, and we play up into that 80% upside, 625-ish. So that's really my kind of game plan for tomorrow, is just seeing where we're holding with that 619 to 620-ish area. Like I said, holding north, playing in the 625. Below that, I'm going to target into 616 to 614. And that's for Qs. A couple other setups I know we've already covered. Just things that I am watching going into the remainder of this week. Is it worth going over Apple again? Has everybody got Apple down?
You can go over there again if you like. It's up to you.
So plus hour, 2 hours or so. Yeah. But Apple, we've went over this with the H's. Above 272.39. I'm looking for this to test into 277, 281-ish. So watch that wave 7 bullish crossover. We're also into that 0.1 standard deviation. Beautiful setup. Beautiful setup. If you're just following this previous sequences, we're right around where typically we find support. So unless we're going to see a move, to targeting to like a 20 to 10% probability move, buyers need to step in here. So that's Apple. Apple's one of the top of my watch list. We went over Uber earlier too. I can go over that real quick. Ideally, this thing above 80.41, we got resistance at 82.08, and then we can see continuation.
Yeah, Apple looks great too.
Average band here, which lines up with that 50%. Everybody see that all right? I don't know why my screen keeps going in and out. it keeps boxing in and out for some reason. I got no idea why. There's that. We got SMCI.
Yeah.
Pretty similar setup there. Whenever I click out of it, it goes back to normal. So I'll just do that.
Yeah.
So SMCI, like I said, still needs to reclaim vector at 30.24. Currently sitting at 30.09 here post market. I like this because we're, like I said, pressing into vector here. We're at the 0.1 standard deviation. So now essentially, if we can get this daily close above vector, we have an 80% chance to pull up into 32.99 area. So that one's going to be potentially really nice. That's SMCI. Next of went over is Dell.
Dell was one that got hit by
All
tariffs
these
really
are
bad.
feel free to listen, feel free to don't listen, but you'll see how the system is able to help us prepare for this. Yep. So Dell is one that we're still chilling 127-ish, so we're just holding on to vector here. Setups invalidated if we lose 126.09 as support. But essentially, we've gotten that daily close above it. Tomorrow, I'm anticipating us to generate us a K signal above that 126. Above, we can start pressing into 129.14, 132.19, then our 80% upside at 136. So we got Dell.
Hey, and just a note, we've had a lot of people join either on X or YouTube since you guys started. So I know the session has run kind of long, and this might seem a little bit redundant for the people who were here early. But recapping this is really nice. And if you guys do screenshots, if you don't have the system yet, you can run this in MooseBot. But after 9:30 a.m. tomorrow, all these charts change. So they're kind of locked in at 4 o'clock in the afternoon. You have all night to do your analysis.
Yes, make MooseBot your best friend.
These markets are not moving. So what? I didn't hear you. What's not your best friend?
I was saying, make MooseBot your best friend.
Yeah, MooseBot should be your best friend. Like even if you're just curious and you just want to check something. But I know even when I'm traveling, I just might hit the MooseBot because I know that like those charts I'm pulling are locked in time overnight. So you have plenty of time to get your analysis done, to look at these numbers, look at your long term, look at your short term, and then when the market starts moving again, that's when the game changes. So you keep an eye on your data.
We're just getting prepared.
Just for people who haven't used it before. So it's not like because he's having trouble with his screen. So as these things are popping in and out, if you can't get a screenshot or something, you have all night to go pull this out of a MooseBot, either on RCG or an affiliate Discord, and you can go pull these same charts that we're looking at right now. And they will look the same pretty much. All right, that's all. Technical stuff.
Yeah.
For sure. It looks like it's back to normal now. Perfect. I had one that we actually found when we were doing the session. So Meta.
Great.
So Meta 663's vector, 663.12 to be exact. So like I said, we're still currently below that. Here, Meta's currently trading at 657 here post market. So like I said, failure to reclaim 663, ideally into tomorrow's session, could lead to a larger scale of a pullback. I said we're chilling in that 0.1 standard deviation area, so we are ready to make a move. Just looking for us to make either a K or M. Like I said, below 663, we have an 80% chance to pull back into 648.97. Above 6863, we have an 80% chance to test up into 673.
I think you cut out a little bit for us.
So
The last part.
So this one's. I'm sorry.
I think you're cutting out a little bit. I was gonna say.
Oh,
Yeah, you're good.
essentially just 663 is that pivot on Meta for me. Above it will generate us a K signal to see some follow through to the bullish cycle that we're currently trying to hold within. Like I said, upside resistance 673, 681-ish, 696. That's if we're holding 663. Like I said, failure to hold 663, we're going to see an M try to signal down at that 0.1 standard deviation, which that leads to an 80% chance to pull back into 648. Which be really play some downside there if we're failing to hold. But yeah, I mean that's really it for me. I try not to get at least too many names on my watch list. So for me personally, it's Apple above 272 ish. We got SMCI above 30.24. We have Uber above 80.40. And we also have. I'm just make sure I'm not missing one. Dell, we already got that. And yeah, those are really the top I'm watching for. I like QQQ a lot. So, I mean, those, I know we have some people in here that already know what we do, at least with how I trade Qs every day. So, kind of digesting, the different aggregations into all to one. So, we have 619-ish PML and 620 vector on wave 1 to wave 10. So, like I said, if we're holding north of that 619 to 620, we're going to see upside present to 625. Failure to hold those as support, we're going to see Qs try to pull back into wave 7 vector, which is at 616. And if the full move can continue, we have our overnight floor at 614-ish. So it all just depends on how we're holding that 619 to 620 into tomorrow, which would be this December 30th. So we can follow back on this after the recording. It's already posted. But yeah, that's all I got.
Awesome. All right. Well, looks like we're gonna go with Intel. Most people said Intel. So that's what I'm going to go with. Now we've found the stock. Now we gotta find which strike and what date I'm gonna go to. I'm gonna post this picture in chat. Wait, okay. So, with the market being closed, obviously tonight, tomorrow, going to tomorrow, it could open, down or up, obviously. Hopefully not up too much because we won't buy calls. So this is, the hard, we know the direction, which is most likely upside, but the next challenge is the timing, right? We could be right on direction, but we could still lose because the timing was not in our favor. So out of the states, the most active contract, which is January 16th or February, narrow it down to those two dates. And then strike, I'm looking for nothing too crazy, like a 38 call. 38 call in February, or in January 16th, the 38 call has 40,000 activity there. So that's something considering there. Or go to February 20th, 38 call. Let's see, with 8,000 of interest. Yeah. Pick one of those.
Something to add on Intel, especially on those February expiration dates. I just forwarded in the chat too. I like to follow flow or see what flows kind of stacking in confluence, and we're seeing Intel getting a wave 7 cross a vector, initiating an average cycle of 19 days. And then following this, and then we see Twitter going crazy about 500K hit on February 20th, $43 calls. So I just forwarded that in chat too. So that's something we were personally watching today too. So yeah, I agree with you that 38 to 40 strike price is going to be ideal.
So, hey guys, how's it going? Hey, BG.
What's up?
Hey, so for everybody listening, I kind of want to concentrate on 3 good swing setups for the week. So what would it be our top 3 swing setups for the week? I've heard you guys talk tonight, and I think between you and Anton, BG and Anton, you guys have a pretty good idea on like the top 3. So let's focus on that, if you guys are willing to.
Yeah, of course.
Swing setups, obviously, they come and go kind of with market sentiment. And right now, we're seeing a lot of bullish, wave 7 bullish crossovers.
So you guys want to do something really cool?
Go ahead. Yeah.
So since we're talking about Qs, let's keep it simple. Let's do a triple day splice. Do Monday, Tuesday, Friday. If you want to pull that up, Anton.
Yeah, no problem. I'll do that right now.
So I did this last week with NVIDIA, and I posted it for everyone. And this is where splice becomes super powerful. So we're negating data that we don't want to use and key data that we want to use. So obviously we started the session yesterday at Monday. Tuesday we're going into, and we're looking to project for Friday. So we're using Monday, Tuesday data and saying, hey, because of Monday, Tuesday data, what are we going to project for Monday?
Okay.
So I did this for NVIDIA last week, and it was pretty cool. Like, we hit the 191.70 mark on NVIDIA for the upside target. We had a little bit of expansion above through 192.69, almost $1 above. That was a beautiful, beautiful overshoot. And it was kind of it was, happened last, I want to say last Friday, so a day before. So you know to risk off when you have that overshoot of a target. Kind of like we talk about with end of day data, like when we have projections of, highs, lows, we have overshoots, like you end up in the money on your contracts. These are perfect examples of. So you're pulling up that Monday, Tuesday, Friday data.
Gotcha.
Okay.
Let's pull up. Okay.
Correct.
Now I can turn off the pullbacks. Yep. Sorry. Go ahead.
Now typically depends on the session. I'll kind of look between the 200 and the 500 day range, but more generally, I'll pull up the 500 day. You have 200 as default, so we pull up 500. Okay, now let's put on the projection bands.
Okay. Interesting. Wave projection bands. Huh?
Well,
Okay.
it's on your far right, on the icons.
Oh, wait. Oh, you mean
Probability probability bands.
Sorry.
You're okay. So let's expand that a little bit. Let's see where vector's at.
I'll take this off real quick.
Those wave bands are actually kind of good. They're kind of good. It might be confusing for some people watching. Yes.
Okay.
And you can do the overlay on the candles. You don't have to, but we can see it through the waves. So this is kind of like probability distribution. Like we look at where the market's going and the projections thereof. This is the finite difference between everybody that's using retail and they're using retail indicators like, hey, I'm looking at fib ratios, blah, 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 this, that, and the other. If it works, cool. But it's not really forward projecting. It's just taking mathematics and doing a distribution. This is machine learned and projections of there. So if we're looking for Friday, we're looking at Qs right now, and we're looking at the current vector of, what is it, 60?
0.87?
Okay. And we're looking at Monday, Tuesday.
Yeah, 20.87.
we're looking at Monday, Tuesday, Friday splice. So we're taking yesterday's session, which was Monday, moving into Tuesday session, which is tomorrow, and then looking for an ultimate target for Friday, which we can hit before Friday, but we're projecting to Friday. What do we have to expect? So we know above vector, above 60, 20, 87, we're going to transition above pivot, and vector is going to become pivot, and we're going to target the 68, 98. So that's 8 points above. Now, if you're looking at options contracts, depending how you want to leverage, you're going to look at the Friday expiry for 68, 28, 98. So pretty much 68, 29. And you can take the contract at looking at 68, 29. And I don't have the contracts in front of me, but I'm going to say it's stupid cheap right now. Like pennies on the dollar for that contract. So your risk value is almost nil, right? So you can look to take 100%, 200%, 500%, 1,000%.
You guys are waiting?
What's that?
What's that? Someone might be unmuted.
Yeah.
Oh.
Do you have a question?
What did I say? Enuma, you have a question? He might not know he's talking. I'm not sure.
Okay, that's fine. But this is kind of like the comparison to Algo Fun, right? Or Periscope. Mispriced options. If we know we have an 80% probability transitioning above vector to seek that 80% band, that's an 80% target. And you can risk on Qs probably less than 20 cents a contract, which is like $2, right? So you can put risk on for like $2 to say, hey, I'm going to turn that contract into probably more than 100% by Friday or previous to Friday. And a lot of time when we look at these triple splice dates, it hits a day before, so it might hit like on Thursday instead of Friday. I did this last week with NVIDIA, and it was pretty spectacular on the 191.70 target on the upside. So it was kind of an easy 100%. But if you were to hold through, obviously, you know, when you move into Friday's expiry, if we're at or just above, it'll be net value of intrinsic value. Now we look at these and how can we make decisions on this? So if we're looking at different kinds of trades, you know, how are we looking to be in the money trades, at the money trades, or OTM trades? We can leverage that. So we want to take acceleration, right? Just like when you're looking at, you know, rocket fuel or rocket acceleration, you know, time, distance, and acceleration. Same thing with black shoals, so to speak. This is not black shoals, by the way, but black shoals, you know, time and acceleration. So if we get the speed of the acceleration within a closer time variance, obviously we're going to have a greater value equalization of that contract at the current price. So if by Thursday we're able to target the 68.20, 68.98, call it 66.29 by Thursday, I would close it out 100%. Especially if I have 200%, 300%, 500%. If we tag that marker before Friday, I will risk off. But we have a variance, right? Looking at the vector of above vector or below vector, 620.8. We have two clear targets for Friday. We have the 80% band above, which we'll just call it the 629. And then we have the vector below for 618.70, if I'm looking correctly at your chart.
Yep.
So we can take two variances on that. All right, we have two clean targets, and I 100%, well, 99.99% probability will say we will tag either. Super clean. Happens every week, every day. Go ahead.
So given that we have that range, would you consider selling both that 80% band, like the green and the red? So for instance, a 629 strike, you sell that one, and you also sell a 6 at 618.70, but say 619, because we know or we expect to stay in that range. Is that fair to say? Would you do something like that? I think it's like called a strangle or turret spread or something like that. We sell both sides.
Yeah, there's a few different strategies to that, correct. So you can sell the range as a premium seller that we don't close above on Friday and we don't close below on Friday. Correct.
Right.
So you can do, depends how you want to limit your risk. You can build into like an iron condor and sell above and below on verticals. You can build into straddle strangle, so to speak, and do otherwise. There's a few strategies for that. I'm not gonna give investment advice on that because you should know those option strategies if you're going to. But yeah, there's at least 3 strategies on that you can implement.
Gotcha. Awesome. Great.
And I mean, like I post on ES every day, I'll take SPY derivative data. I say, here's the ceiling and floor. You know, on the on the splice data, and we 90 percentile we tag a target on splice ceiling or floor, or splice target, I should say, not ceiling or floor, splice target, and then revert within. So that's a credit strategy in itself. Or taking a leveraged long position above or below. It's kind of a straddle position. If you straddle for each strike price, knowing each target, you can do that too.
Great. If you look at chat, guys, user kind of explained it to elaborate on this picture we're looking at. Yeah, as Milk explained, we can expect price to hit the 80% band, the green one, the 50% green one, or the 80 red and the 50 red. We expect one of these outcomes by end of the week. Anyone have any questions?
Feel free to jump in if you guys have any questions. That's welcomed.
Yeah, this splice stuff's great. I mean, if you look every morning, every time I look, it's 80% red target is hit. As Milk posted it the night prior, and then we see like a range day, and then it'll go expand up the rest of the day. Lots of opportunities in the morning, just looking off the splice.
Yeah, I do have a slight question on this graph. You said leave the wave projections on, and these are like way outside the parameters of what we were talking about for targets. So is this just showing us that these would be the outliers if they were to occur? So like if you're still targeting the near term target, which would be the 628.98, which is 8 points up, or the 636, and you went further in the money, I mean, these could go as high as like 650 on these outliers, or do you think that there's a day that's included in our data that was just so far outside the norm that that's why these projections are showing up on the sample that we took at 500 days?
Well, I mean, to lead to your expression, these are like, those overshoots are exactly what you describe on end of day like estimates. So when we get these overshoots of those targets, it's like the similar cause. So if we get a close above or a close below those splice targets, you get contracts that become way further in the money. And those are pretty nice. Reghov kind of actually posted on that this morning. Trying to pull that up real quick.
Okay, and someone's asking, Brian's asking, why did you consider the Friday splice too, and not just the Monday, Tuesday as we had into Tuesday?
Well, for the splice targets, from my experience, and you can actually do like variations of, but I like to take the previous day data and the current projection data for the forward day, and then take the day that you're looking at. So we just ended Monday's session, so we have a good data sample there. We're walking into Tuesday, so we have a good data sample projection there. So we have two really good data samples between Monday and Tuesday. Now we're looking to Friday. So if we can do a triple day splice, so to speak, take the previous day's data, the current forward-looking day's data, and then the day we're looking at, we have machine learned in the system two really good anchored data sets looking to what we want in a forward projected data set. Does that make sense? So that worked perfectly last week for NVIDIA, especially since it was Christmas. It was a holiday week, and I had several questions on that. I'm like, okay, we'll take the current data set, take the next day data set, and then the data set that you're looking to project to, and you have clean targets. So like on NVIDIA, I had last week on, I want to say it was Wednesday, Thursday. I took the Wednesday, Thursday looking for actually Monday projections, and I calculated 190-170 for NVIDIA on upside, and downside 184.46. We hit the 190-170 projection on Friday ahead of the Monday projection. So we were calculating for Monday, but we hit it ahead of time with the splice data, and almost $1 above, 99 cents above on Friday. So that was an easy risk off, and you're like a day ahead on your contract. I wouldn't have taken the Monday contract. I would have taken the forward Friday contract, but you would have been up over 50% on that contract doing kind of a swing trade. Does that make sense?
Yeah, that makes sense. Brian, does that answer your question? Someone did ask yesterday in the Sunday session, why wouldn't you just splice 5 days a week?
Well, splicing 5 days a week is just as normal fractal.
That's what I was thinking. Okay. All right.
But so what you're trying to do when you splice, you're negating certain data sets and only highlighting key data sets.
Just to be clear, we're using the last Friday, not this Friday for the splice.
Well, if you're projecting for this Friday, I would use Monday, Tuesday, so yesterday, and looking into tomorrow, and then projecting for what Friday will be. And I can 95 percentile guarantee we will hit either target by Friday, if not before Friday.
All right, so I have a follow-up question to that now, because we just came off of a holiday week, right? So the Friday omits the previous data. The Monday and Tuesday were normal days to some extent. But going forward, I mean, if we're doing this session on Monday nights for swings, we could be pulling Monday, Tuesday, Friday splices every week, telling us likely where we're going to land by Friday, if
Correct.
not before Friday.
Correct.
Each week. So that might be a good systemic approach to Monday nights, which is a good reason to do these on Mondays and not the weekends, because you've got your full day's worth of data in the can when you go to pull it.
Correct. Because you're looking at Monday, Tuesday, looking for Friday expiry, and those contracts are typically pretty cheap. And there depends on how far out of the money you are. Like last week, looking at we were at about 189, looking for the 190, 170. Those were, I want to say, less than $2, and hitting on, and we had the exposure above, or we were almost $1 in the money the day before. I mean, that was more than 50% on that contract.
Great.
And then if you were to take a hedge on that and take an OTM contract on the put side for 184.60, those contracts were like 20 cents. So your hedge was like 20 cents, $2. So that, if you're kind of pulling a spread play on that, so to speak, it more than paid for itself. Does that make sense?
Yeah, that makes sense. Thanks. I was looking to see if there's any more questions.
Yeah, we'll go on pretty late here, but
yeah, I think a lot of people join late too. But thank you so much, Anton, for hosting and doing this for everybody, and DG for coming in, and whoever else came in early. And thank you everybody for showing up. The more knowledge we share, the more edge we have in the market. So always a collaborative effort.
And also, we'll do a before and after with what Wilk just talked about with this chart I had pulled up on Friday. And you'll see what he's talking about.
Yeah, I want to say in Discord we only have about 30 people in here, but on Twitter, people watching us currently, we have 378 people watching. So it kind of says a lot. Yeah, 378 people.
Great.
Shout out to all the Twitter people. Thank you for watching.
Yeah. So there's a lot more data that we try to extrapolate and show. Looking at the splice data, it's just exponentially powerful. It's kind of crazy how powerful this is, and just proves itself day in, day out. I love using the dual day splice. Obviously for day trading, I'll use the previous day for the forward-looking day to extrapolate our targets, and they hit within about a 90 percentile range. So, I mean, it's an easy strategy to utilize, and you can use it within a percent of margin, say like on SPY, 50 cents, for a risk off. Because just like open state targets, if we miss an open state target, it's usually within like 50 cents. So if you were to front run that on ES, looking at conversions of SPY to ES, you can say, hey, I have a margin of 50 cents or just over 5 points on ES, and you can risk off. Now, not roughly 90 percentile, we hit those targets anyways, but you can risk off, roughly 5 points on ES if you do the conversions for SPY to ES. And it's stupid simple. It really is. And this is all aggregated data, often historical volatility, forward projected. So this is not a lagging indicator. This is not your normal projections, often just lagging indicators. I forget the name of it, but we,
It's forward looking. AZ Trader has a question for you, Monk, before we go. He said he joined late, but for day trading strategy, I'm guessing he's talking about 0 to 2 weeks to project the targets for the following day, which would be tomorrow. We would still be looking at the dual day, Monday, Tuesday splice, right? Not using Friday, but grabbing that data after Monday's close. So after 4:30 on Monday, running a Monday, Tuesday splice for Tuesday 0 DT.
Correct.
Okay.
After Monday close, I've been looking for a Monday, Tuesday splice for Tuesday projection. As I posted for YB tonight. So the upside for tomorrow is a wide outlier target. So the downside targets are more realistic. Now the upside outlier targets do hit time to time, but I already know from experience, like if I pair the data, if I look at IV walls, overnight, floor and ceiling, and then also pair in splice targets, I have 3 data sets, right? So confluence. If I have 3 data targets projecting the same target, I have a high probability target, correct? So if I have 3 sources of data saying, hey, here's the same area that I'm looking for, it's pretty actionable. If I only have 1 data target saying, hey, here's 1, I know it's generally an outlier and not something so actionable. It can happen, but it's probably like a less than 10% action. If I have 3 targets, I can say 30%, 30%, 30%. So I have kind of a 90 percentile target range. It's pretty simple and straightforward. And these splice targets hit almost every single day within close to 90 percentile. So like looking at the overnight tonight, what I posted for Monday, Tuesday splice, the downside looks way more favorable, and obviously it's kind of contingent on pivot, but the low side target to 69.36, easy target, maintain below our vector, and then our kind of like golden target will be our 80% band on 69.30, 63. And that's where I'm kind of looking for the overnight. And I like to use more the RTH data typically. I don't always stay up for London. Asia kicks in usually around 10. London 2-3 a.m. If I happen to be up, then I'll be looking at that. But you can easily manage risk just above vector or on my milk chart's E vector. Like if we were to mitigate risk just above, I mean, you could risk like 5 points for 20 points below for our splice vector, and that's a super actionable strategy. And for guys that have been watching like my milk charts for a long time, you can see that kind of in the milk alerts channel over and over again. You can like look over and review all the recaps and how these play out. Obviously, RTH data is a stronger data set, so you can watch that every day. Like when we can play into OM data, bring that in and see where the tail wags the dog. So when we talk about when the tail wags the dog, the derivative market is actionable during RTH, right? So RTH, we have market makers, institutionals leveraging in and out where they don't want their positions to go and where they want them to go. And we know that via the ceiling and floor, and so we can get this pretty good read on the session of, you know, where we leverage that, where do market makers not want a session to be at, and how can we have reactionary data from. Now ETH session, extended trading sessions, the overnight, when we look at pretty much anything before 9:30 RTH open is thin, right? We know there's less activity, less volume, right? We have like Asia and London moving in pre-RTH. So it can move markets, but it's thinly done so. So when we move into RTH, where we have New York, Chicago, everyone on the US side, trading what real money is, that's where we have the higher actionable data. So just make sure if you're trading ETH, you leverage down, right? Because it's more thinly traded. So if you were looking at your normal position, you're looking at, hey, do I have an actionable decision? Should I risk a certainty different way? Absolutely. So you should look at that as like 20% of your normal risk profile, so to speak, because it's so thinly traded that it can adversely move against you. You can be right, and later on you'll be like, oh, I wish I would have leveraged more. That's not the game. The game is the long term, right? You produce this product over and over and over and over again, and your future self will thank you a year from now. Because if you're trading ETH, it's less predictable because it's still thinly traded. That, hey, if it's less predictable, am I going to want to leverage the same probabilities? Absolutely not. You want to adjust accordingly. So when you move into RDH and you have a good read and good probabilities and actual data, then you can leverage up right to your normal risk profile. So it's very, very important that you distinguish that and recognize that. And it's just like playing poker. When you walk to a poker table, whatever you put on the table, do you think in dollars anymore? No. Every chip is a bullet, right? So it's now no longer dollars, it's now leverage. It's how many clips do I have to play this game? And I think that's super important and a huge, huge step for everybody in trading, playing poker, playing games, doing anything. Like you have to distinguish. This is no longer money. This is how many actions do I have? So when you're playing poker, you don't sit there and say, hey, I have $500,000 leverage. You say, I have so many chips. So when someone calls you, bets you, or you leverage up, you start looking into your pot and saying, okay, well, if this doesn't work out, how many actions do I have left? And every action should equal less than 20%. So if you were to lose on this pot, so to speak, you should be able to make 4 more actions afterwards. One action should never dictate your whole profile. You should be able to have 4 to 5 more actions afterwards. So you have to disassociate that monetary value. You have to think about it as bullets spent. You have a gun. I'm walking into a dangerous situation. I'm not going to lose all my ammo on one target when I know I have 10 more targets waiting, right? So that association, disassociation is very key. You have to have that mind shift. And when it becomes true for you guys will realize it.
There's like a couple more questions now that you
Go ahead.
can have a follow-up. Yeah. George is asking, in the spread monster, would you use the percentage greater than 80% with dual splice?
I'm not sure I fully understand that question.
I think he's talking about like the data side where it gives you the statistical odds. What I mean, what I think is with the display, it's so straightforward that if you saw those numbers lining up with the statistical side of the Fed monster, then you could say that's more confluence. I wouldn't replace anything you see on a splice chart with something you see in a statistical chart.
I would agree with that. If you can kind of pair that data,
Right.
then it makes it that much more actionable.
Yeah, and that's what I was thinking too. Is that I've been playing around with that spread monster a lot too, and that statistical side it makes things a lot more actionable for me when I can see that greater than 80%, and I could feel a little bit more confidence with, in particular with my spreads itself too. So, and I just didn't know if it made sense to lay that level on top of that splice pattern.
It absolutely does, George. So when you're looking at that,
I think it needs
you have you have two different facets. So you're looking at statistical probabilities, and then you're looking at derivative data. So the tail wags the dog. So in most terms, the derivative data is going to dictate most. But when you compare statistical with derivative data and they both are semi-aligned, that's super actionable, if that makes
Yeah,
sense.
yeah, and when they do pair together, it's been working out really well. But they just have to pair. You're exactly right.
And I think that's a good point to distinguish. Like there's statistical data. What's the average move on these data sets? And then what is the derivative saying? And I'm going to say majority of the time, derivative data dictates. And then we look in that margin of what the statistical data says within the derivative data. It's kind of looking like look the macro data and then looking short term. Like kind of what I preach in, Mentee's channel, like big picture to small picture. You want to stitch the small picture into the big picture. So the big picture usually dictates the macro view, and then what's the micro view. So if we know there's large positioning via the derivative market makers, we know where they are very hedge prevalent, so to speak, where they don't want price action to go to, or where they prefer price action to go to. And then if we compare our statistical data of our average moves, and that comes into and pairs with, it's absolutely beautiful. I love it when it pairs like that.
So the next question for someone who arrived a little late, and it touches on what you were just discussing with George with pairing data, and something you mentioned earlier, but specifically, he just joined Fractals this month, and it's been overwhelming at times. Curious if you could give me the top 3 areas to focus my time on to get from the get-go before I go down the rabbit hole in all of the areas. And you were saying the 3 things that you were using for um, basic outlook was the splice, right? The IV walls when those pair together, and then just your wave charts, depending on the time frame and how far out you're looking.
Yeah, Anton, are you still listening?
Like if we could tell this guy 3 things just to start with, that would be helpful. Because it is overwhelming. There's a lot of tools. AZ Trader, there's a lot of tools in the system. You don't have to learn them all at once.
No.
There's a lot of tools.
And to that point, You only need to really use like 5% of the system to make actionable decisions. You don't have to know everything backwards, forward, inside, and out. Like, it's great to know all that, but you can make an actionable decision with just 5%. And when I say 5%, let's look at 3 different data sets. So I don't have my chart pulled up because I'm recording / streaming. Anton has his chart, I think, streaming right now. But if we were to pull up, say, SPY or QQQ density chart, we could look at the IV walls. Now we know that's derivative data, and it's also paired with historical movements. So this is where it gets fascinating, and I don't want to call it complicated, but once you understand it, it's very simple. So we look at historical moves, historical volatility moves, and pair it with derivative data. So we can take that into the IV walls and the wave functions in the density chart and measure these moves pretty accurately. So like if anybody that's listening follows my charts that I post every day when I post the IV walls, that is actually a paired data set in itself. You know, we're taking derivative data where market makers are saying this is where we are hedged at, and also historical volatility has been measured at and paired into one. Much different than JEX. Several people listening are probably familiar with JEX data, gamma exposure. They're probably not super familiar with why. Why are market makers hedged at these levels? Why is JEX data important at these levels? Well, is it paired with another data set? You're taking assumptions. You're saying, hey, there's a large hedge prevalent here. Market makers don't want to move above. And sometimes it works, sometimes it doesn't. So I'm going to say it's a coin flip. And you can make a decision off coin flip, right? All you need is a 51% decision to make something actionable. So you can do that. But for everybody listening, if you are very familiar with gamma exposure or JEX, you can actually take that previous knowledge and use that and apply that to IV data. So where we have the next step is that we actually have historical volatility moves measured algorithmically through our proprietary data and algorithms that generate the forward projections and measure that on our IV walls. So we can take that derivative data paired with historical volatility and actually measure that. Now these play out all the time, more often than not, and way more than 51 percentile. Obviously, it's closer to like 90 percentile, pending an outlier move. And when we have outlier moves, we actually know the mechanics of that, just like today. If anybody like watched my charts today, you know, we had the downside break of IV walls, what was priced in from market makers and historical volatility. Once we break those, we know more than 90 percentile, we close session at or below for downside. And the same applies for upside. If we were to break an upside call wall, we would close at or above. So can you make decisions on that? Can you make trades on that? Absolutely. Like it's clear as day. It's so actionable. It's not even funny. And so we look at these mechanics of when we have these breaks of, you know, market makers have to reposition. They have to cover on deliverables. And so that exposure that we normally see on JEX is not the same anymore. So when we have this close below an IV wall on the put side or a close above on the call side, we know greater than the 90 percentile, we're going to close at or outside of those walls. Hopefully that makes sense. I know Anton's streaming his chart, but not my charts. I would share them, but I can't right now since I'm streaming and recording. But it's just...
Yeah, we put one in the chat though. We
Okay.
put a link to the milk alert for tomorrow's chart and for the splice. And then if you go to that link, you can actually look at a recap of any day, yesterday, today, all the days are there for the recaps of what did happen at the end of the day. So there's the chart in the morning giving you the levels to look for, and there's a chart in the afternoon of what actually occurred, what transpired. It's like a timeline. It's nice.
Correct.
Thank you for doing that.
Yeah. So if you were to go into the Milk Alerts channel and look at all the recaps, you could actually back test everything, so to speak. You can be like, how can I develop a strategy off of that? And I'm not going to spend 15 hours to explain it, because that's what it would take for mentees, so to speak. But you can look at this over and over again. Key actionable data. Pivot. Gives us a bias on the day, right? We know above or below who's in control. Works with secondary pivot too, like I dictate for tomorrow's session. We're going to have a high probability range in between pivot and secondary pivot, and then we're going to have a breakout. And it's going to be very consolidated for tomorrow because we have very strong structure even below and above pivot and secondary pivot. So we're very consolidated for tomorrow's session. So don't look for a large trend day. It would be a massive outlier to the upside if we did. Downside is super capped. It's just reading the narrative as if a book. And that's what we do every day with data.
Thank you. AZ Trader, did that help you? The other thing that you guys might want to know is on Sundays at 4 o'clock, we go into like a study session and prep for the week. And it's open. Everyone can just come in and share, ask questions, whether it's about the fractal or a specific trade. Any questions are welcome. We do an open format. I think this weekend, Biggins actually going to come in with a focus on the market maker landscape and the put to call ratios and how to read the OMM. If anybody wants to learn that, that's on Sunday. So just if you have an idea or a request, let us know and do our best to get somebody to answer your questions.
And I highly recommend that. If you guys have a chance on Sunday, Big Gun will be going over some of the market maker mechanics of what we look at with the IV data and other data sets that we use for market maker positioning. So I highly recommend you guys tune in and listen to that, because just like I was talking about macro to micro, if we know day in day out where market makers are positioned, how can we make decisions on that? And it's super actionable. It's very clear. So please watch that. Please pay attention. And you can start to look at that as your macro view as an intraday trader, because it's very important. Very, very, very important. And then we can look at structures within to see how we trade within those. And you're gonna see this, and after you do it for a couple weeks, get the screen time in, you're gonna be like, oh my gosh, okay, this starts to click and make sense. So please do that. If you have a chance, tune in on Sunday with Big Gun. He'll go over that. I'll probably chime in a little bit. I'll go over some other additional stuff. Looking at these historical measured volatility moves are very important. So like what Xavier was kind of going over and AZ Trader was asking, 3 confluence points. Looking at market maker positioning, what are the mechanics of that? What happens when we hit these levels? What happens when they're positioned certain ways? Well, we know deliverables, if we have a ceiling and floor, market makers want to capture and beside that, ideally, right? And they actually want to go towards PML or the trough zone so they can capture the most premium. But when we exceed the ceiling and floor, what happens when they have to reposition for those deliverables? And what are the mechanics of that afterwards? And then what is the structure outside of that? So those are kind of the 2 to 3 key confluence points. And we can make decisions on that every single day, knowing this data. And it's all data. It's not I think or I feel. You hear all these retail traders talking in spaces, doing this, that, and the other, saying Apple's breaking out, Tesla's breaking out. And then what happens? It reverts. Well, they're breakout traders. And they're doing I think, I feel, volume based, this, that, and the other. Get the fuck out of here. That ain't data. You're thinking and feeling a trade. Do you think any institution, commercial, market maker, anyone is doing I think and I feel a trade's going to go a certain way? Fuck no. And excuse my language. But hell no. They act on data. There's no I think and feel a trade. Zero. So remove that from your vocabulary. If you use like and you're looking at a trade, you need to stop and take pause. If you're explaining a trade to someone, you're like, you don't have conviction in that trade. Not that it's wrong, but you need to be able to convey that in data to someone else. So a keyword, if you say and it's okay to say it time to time, but you're saying stop and take pause, because you probably don't have enough data to make a decision yet. So if you can convey something, make sure you can convey it in actionable data, right? You have 1, 2, 3 data sets to convey something. If it's a thought, that's okay too. If you're like, I think something's going here, but I'm looking because of this, then you're making a decision based off in data. Every trade you walk into, you have a trade plan, so to speak. You have a risk profile. You know your account size. You're not walking and saying, hey, I'm going to risk it all because I think, feel, or even just because of data set. You still have a risk profile, depending on your account size, but usually 2-3%, max 5%, because capital preservation is number one. I don't care what your return is every day. I care what your capital preservation is, like your max limit loss. So you can look for a 2-to-1, 3-to-1, 5-to-1, whatever it is. That's awesome. But I care more about what you preserve on your capital every day. Because long term, your future self, a year from now, is going to say, hey, thank you for not risking my whole profile, for not risking more than I can actually comfortably absorb. And over a year time period, I made a certain percentile on my portfolio. And I'm going to thank you for that. Now that short-term narrative person is going to say, hey, I can risk 50% of my profile to try to double, triple, quadruple my profile in a short period of time. Well, if they do that enough times, guess what happens? They almost zero their profile. So that year from now person of yours is going to be like, dude, you're a dumbass. I'll take that 50% a year from now than a quadruple return in 1 month and then have 0 a year from now, right? So it's just like a staircase. Each step, each step, each step. You take one step at a time to get to the staircase, top of the staircase. You do not reach the top of the staircase in 1 bound or 2 bounds. And those people that do, they probably fall all the way back down the staircase at some certain point in time. So start looking more long-term view. That's my recommendation. Like your future self a year from now, what does that look like for you?
It's about longevity.
It is. Anybody that makes it in this industry is longevity. It's not about tomorrow. It's not about a week from now. It's not about a month from now. It's about a year, 5 years, 10 years, 30 years from now. That's how you make it. Like,
Thank you for that, Milk.
yeah. I mean,
That was a really good,
yeah, I
really
mean,
good explanation.
yeah, top ticking and bottom ticking everything day and having these amazing returns every day sounds super sexy. But guess what? I won't hear from any of these guys a year from now. They'll disappear. Why is that?
Get too arrogant.
Well, it's because they're over leveraging.
That's it.
I want to call it arrogant, but just saying not enough experience to know, hey, when am I over leveraging? I mean, you can make a comfortable living off in 10% year on $1 million profile, right? Why are you going to risk $1 million on almost every trade? Let's call it 25% of your profile. Let's say you risk $250,000 on every other trade. Well, you know that's outside your risk profile, and it's going to work for a while or not work for a while. But some certain point in time, if you're over leveraging, over risking on that, you're going to go into what we call FOMO, or over leveraging to try to make back so-called losses, and you're going to lose even more over time. So why do that? You're better off not even trading at all. But it's just the reality, though.
Well said.
Yeah.
Well, one of the things that brought me, brought me to RCG and brought me to this Discord was that you guys are so willing to share your knowledge. And, we have a tool and people can buy that, but the sharing of knowledge here is collaborative, and our Discord is free. For the 370 people watching right now on Twitter, just come join in and see what's going on, because there's tons of education in here, written, verbal, videos. There's tools like the new spot that you can use, and if that just helps you understand the market better and level the playing field for you and give you an edge. But the thing that you can't buy, the thing that you can't buy an app for, that is what you just heard from Milk. And one of the other founders, Russell, he created this one. He's in here every day. These guys trade side by side with us, so there's that priceless aspect of them. And
Yeah, the recording of this will be on YouTube and Twitter. If you guys follow my profile at MilkRCG or at the Fractal Exchange, recordings will be there, as well as on our YouTube channel, the Fractal Exchange. So tonight's recording is on there, unedited for you guys to listen to. And everybody that's participated tonight, we appreciate you and we welcome everybody in our community. It's all about data. You know, nobody's 100% right all the time. Nobody's perfect. But what we think about in the market is probabilities. So we have actionable data that we make decisions on based on data. Not I think, I feel, I hope, I want. It's just data. That's all it is. So if you can look at the market in terms of probabilities, you can now make actionable decisions on risk profiles, correct? Yes. So that's what we do. And that's what we nurture in our environment. And as the user explained and Anton has shown tonight, that's what we want to convey to all you guys this evening. Like have a systematic data system that can extrapolate the probabilities, you know the mechanics, you know the structures, and you can repetitively do that over and over and over again. So let's move away from retail systems of indicators. Indicators are lagging, right? They're showing what past happened. They're not showing projections of forward looking. We can do forward looking projections in the system, the fractal system, and we can make actual decisions on it. So I employ all of you guys to take the time to learn, and I'm not gonna say it's easy, because that would be a false promise, but it does take time to learn. And you know what I always talk about is homework pays. Like when you went to high school or elementary school, whatever, you're like studying, doing homework sucks. Okay, well you're an adult now. Do you want to go work at McDonald's for 10, 14 bucks an hour? Or can you make more than 14 bucks an hour doing your own homework, working for yourself, and making decisions on that? I can absolutely guarantee that. Well, I can't make guarantees, but I'm going to say yes, because I do that every day. I haven't been sitting at my desktop for years on end in my whole life not doing so. So it has afforded me a lifestyle, and it's not easy. I'm not going to even come close to promising it's easy because it takes work. If you put in your homework every day and you make those decisions based off in data, I'm hoping all you guys can learn to work for yourself, because the biggest message I can convey to you guys today, what is wealth? Now, probably for a lot of you guys listening today, wealth has a dollar sign assigned to it. No. The biggest definition of wealth is owning one's time. When you own your own time, you are truly wealthy, because I can afford to go buy someone else's time. So now I am therefore wealthy. I'm renting literally your life. I'm buying your time. So, when you get to a point in your life where you can afford to buy other people's time and you own your own time and no longer sell your time, you are therefore wealthy. So whatever decision that is for you guys, whatever mile marker that is for you guys, that is the true definition of wealth. And I'm going to end with that. Anton, you can take it away.
Awesome. That's an amazing way to put it. Yeah, just going on wealth, just beyond dollar amounts, but other things too. Yeah, owning your own time, health, many things, and knowledge, all that. So, yeah, it's definitely a great way to put it. It's a great way to close off the session with a little life lesson stuff beyond trading. Yeah, thanks for joining, guys. This is Swing Trade Mondays, as I once planned out, and now we're doing it. It's great that you guys all joined. This is an every Monday thing at 7 o'clock Eastern Time, 7 p.m., and where we discuss swing trade plays. Like Mel said, not if, maybe, I think. We're looking at data, statistics, news articles, everything to look at, and put all together, all the tools we have, we can put together, and then find the future outcome of what we're looking at, whatever underlying it may be, like Intel. So, yeah, thanks again to everyone that contributed and joined tonight. We'll be doing this again shortly. Thank you, user, BG, Milk, everyone who chimed in. This was a great session.
Yep, and I just want to thank everyone for joining us tonight, and we welcome you to our community, and we'll see you guys around. Take care.
Awesome.
Thank you. Have a good one.
All right. See you guys. Thank you.
Bye.